Michael, do you have a thoughts or 2 cents on it? Because I figure you might be able to answer it.
Oh, I hope you guys had a good day today. The question actually,
It's a great day, brother.
the question is how when you get baptized in fire and you finally feel that sting of it isn't working in my hands yet. It isn't working in my hands yet with real money. It isn't working in my hands where I can actually start making the money. And this is the benefit. It's kind of like why I'm really pushing really hard this year on just one single micro to kind of like build a foundation. Because let's just put it this way. It's the weekend. Chances are you're probably going to go and get a meal somewhere. And I want you to take a look at that receipt and think about how much money you spent on that meal. If you're poor and you're choosing, if you go through fast food, you're going to look at that and say, well, I remember when it was cheaper. But when you take a trade with a micro, with the premise that you're trying to desensitize yourself, you're trying to remove the urgency of having the outcome go into the win column for you, so that way you can feel confidence, you can feel rewarded, you can feel like there's measurable rate of success now that we can quantify and say, hey, look, this is it. I'm really doing it now. When you take a loss and it's in the smallest degree of leverage, that is such a rewarding feeling, but it won't feel like that when it first happens, because it's you all want the first trade to be the winner. And you got to get over that. In fact, you should probably, your very first trade with one micro, flip a coin, heads buy it, tails sell it, and put a 15 handle stop on it and just see what happens. And you'll see that life still goes on. If it takes it from you, fine, it's no problem, but you broke the ice. You're going to spend so much time worrying about the outcome at first trade or your first week. Am I going to make as much as I hope it would make? Piper, you got to get out of here with that toy girl. The idea is you want to first experience it. Don't be fearful of it. When I was coming up, I was fearful of the losing. I was fearful of the money being taken from me. And it kept me from participating longer than I would have if I would have had a better education around it. But I think that having the exposure of a loss and feeling that baptism in fire where you feel the pain of, am I going to be able to do this? What am I not seeing? What am I not doing correctly? But reminding yourself at the end with one micro, taking that loss, saying, look at how little that is. How much money have you wasted in the last 12 months on dumb stuff? You bought something that you really didn't need. It was impulsive buy. You bought something for your kid who probably had it for 10 minutes and broke it. We've all done it. But do we lose our mind over it? Do we think, oh man, why get out of bed tomorrow, man? This is ridiculous. It cost me this much money to go and get a steak dinner with my wife. Why work anymore? Do we go to that extreme? No. But you build this up in your mind as an expectation or a realistic response to drawdown. Oh, I'm never going to be able to do this. So by taking the effects, the power, the quote unquote leverage of losing, taking the loss, you have to make it so small. There's no other way for you to minimize it except for you having never taken the trade at all. And that's not realistic. If we're going to trade, we're going to assume risk. By reminding yourself that you just took something, it's like a paper cut. It's the smallest form of withdrawal from you that you allowed for. You limited it. It didn't take more. You didn't afford more for it to take. You didn't give it more time. The stop was there to take you out. And now you want to reflect on what you feel. What is it you're feeling? What is the first thing that shows up as a negative? Who are you thinking of? Because many times it's your spouse, your significant other, somebody who you're accountable for, or to rather. So it's important for you to realize that you may love your spouse, you may love your husband, you might love your wife, you may love your best friend who's your buddy that you're trying to talk to get into trading with you. But you know what? You don't owe them anything. You don't owe them an explanation. They're not taking the risk on. But many times you're going to find that you have an outward some kind of something other than yourself that you're trying to live up to expectations. And come to find out, like the other the trader was saying something to the effect that he was looking for something to, I guess, feel more comfortable with his wife. But when the money started coming in, she didn't care. And I can tell you, for 20 plus years with my present wife, she doesn't care how it gets here. She doesn't care. She doesn't care about the mechanics. She doesn't understand why it's like that. It's still a video game. So it kind of like reinforced the idea as an educator, like, you know what? This is actually good teaching, because I love my wife, and I'm sure you love your family members or whoever you're accountable to. And you want them to look at you like you did something well, instead of saying, I did something well. I followed the model. I did this and I did it correctly. How did I do it correctly when I lost money? It took the least amount of money from me. I'm not deterred by taking the next trade with this model because I controlled the amount of loss. I kept the account from hemorrhaging money. And by having that mindset when you go into this, what will happen is it's a paradigm shift. You'll move away from, I need to be right, I need to make money, versus this one didn't pay out as much as I wanted it to, but it's okay. I barely felt that. Let me take another one. And as you do this over and over again, you get desensitized to the outcome and you start focusing on when the setups look better, when you're going to feel more in tune with the marketplace, or you're going to also know, and I'm still pissed off about something happened the other day, and I'm stewing over that, and I know I probably shouldn't do this. And you're going to be mature and say, I'm looking for some kind of outward stimuli to distract myself from the pain I'm holding on to. Boom, let go of that. Don't even trade. And that's what I'm trying to teach my son Cameron to do, is if he takes a loss, immediately he weighs that against, well, if my brother Caleb saw this, he would probably give me some ribbing about it, and it already hurts enough. Why tell your brother? You don't owe Caleb anything. You don't owe Dad anything. You're doing this. It's your account, it's your money, it's your success when you achieve it. So it's not a partnership. It's you. You're the CEO, you're the CFO, you're everything. You're the HR department, everything. So you're going to fire yourself if you don't follow the rules. You're going to promote yourself if you do. If you make the company more money, you get a promotion. You get more equity to use. But as you lose sales and revenue because of decisions, because you're the person in charge, you're the entire board of your company, the decisions you're making may take that company in a different direction. You may experience drawdown. But do you close up business because you just lost a little bit of money? Had a bad quarter. Amazon had a bad quarter in sales. Did they close up the shop? No. They make adjustments. They change things. They mitigate their losses. They do fire sales on things they know they can move fast. They get revenue up. So what does that mean for you as a trader? Look for better conditions, better choice setups, and only trade in optimal times when you are healthy, you're centered, and you're not going out there just to get some kind of a reward for enduring what you just went through yesterday and you're still hurting over it.
Awesome.
Wenger?
No, that's
Secret sauce.
perfect. Thank you.
I love it. Hands are up. Joe trades. We got AM and Alex coming up. Joe trades.
Hey guys, hi Kitt. Hey everyone.
What's going on,
I'm
buddy?
good, thank you. Hi Mike, and just want to talk to you guys about like the prep firms and all that, because I've been like in this space like for I don't know, like 3.5 years, and I spent a lot of money on prep firms, and I kept blowing accounts because of this revenge reading. And
Where are you from? Where are you from, Joe? How old are you? And how long have you been trading? How do you engage with
yeah,
price?
thanks. My name is Joe, and I am like 22 years of age. I'm from Morocco, Africa, if you heard about it.
Yeah, we know where
Okay.
that's at. And how do you engage with
So
price?
I did mention it like in the space that I was like with you, and I said that I'm trading like the opening range gap.
Yes. It's more reintroducing you to anybody from when they didn't hear you maybe last
Thank
time.
you so
So
much. So I'm trading like the opening range gap, and my focus is like the 50%, and I think it's like 70%, 70% got me like 70% winning rate like with this model, and I actually like focusing also on London's lows and London highs and keeping that in mind, and like my main focus is the first present for value gap and targeting the 50% of that first present for the opening range gap. I'm so sorry, I'm a little bit like not very good,
you're okay,
This
buddy.
is the
You're doing
first time
great.
like
You're doing
thank you so much,
fantastic.
Kitt. And
You're doing
the
great,
thing
brother.
is like I've been like successful like recently with this model, and I made some money, not gonna lie. And the thing is, I'm just can't control myself when I am like in a losing position, like when I saw like a red like numbers and stuff like that. I don't know how to fix it because I've been like doing this, and I've been trying to like to stay away from it when I am losing or something like this, but I can't actually like control myself during that time.
Are you saying live while the numbers are fluctuating or after the trade closes?
Both actually. Like when I am like when I saw like red numbers, and when I am like I lost like money or something like this, I can't actually like control myself, and I kept like
Because my 2 cents of while the trade's live, just in TradingView, they have an option where you can completely turn off the profit loss and the ticks. You just have number of contracts. That helped me a lot.
yeah. And the thing is, after trading like with prop firms and stuff like that for I think 1 year, and I got like really successful with like this model. I think what actually like changed my trading and stuff like that, after like I passed my account, I just go to like macros, and I'm now like trading with 3 macros, and my account like is growing up like pretty good. And yeah, that's actually like remove me like from that state of mind that I need to make it like in 2 weeks or like in 1 week or whatever. Like just keeping it like consistently and trading with macros like helped me a lot. And this is like because of ICT. And thank you so much, Michael, for this.
Great job, Joe. Thank you for coming up. We appreciate your feedback and good
Thank you
comments.
so much, Kitt.
Good
Thank
comments.
you. Thank you so much.
High five, buddy. Alex, come on up, buddy.
Yo, what's up, man? How you doing? What's up, everyone?
We're doing great, my man. Thoughts on today?
What's on the day, man? Just came back from Dubai, man, right now, and yeah, what can I say? It's good. I just turned 26. It's good, man. But
Happy birthday, brother.
thank you,
Happy
bro.
birthday.
Thank you, bro. But I like what Michael, Michael said today, man. I mean, said about trading one micro. I trade. I trade inversions and I trade the first presentation. I like to use the first presentations from the past and I keep them from 20 days. And I reuse them after I see a trade on them, right? Because I use them like footholds. Like Michael said, you have to have footholds. And I use the RDH gap and see, right, in the first time with the quadrant. And, right, also specialized on a daily bias. But yeah, I really like when he said you need to trade with mono micro. Actually, I got the first time I got funded was this year because I was struggling a lot to get funded. I was making some money in a live account, but I was struggling a lot. And when I found I was trading with micros, sizing lowest as I can, I just saw results because I was trading with too much size back in the days, and I was saying, oh, let me trade less size, let me compound more, let me just size down, see what's gonna happen. Because who's rushing me, right? I was rushing because I was intrigued about seeing other guys getting paid fast and getting big payouts. I mean, that wasn't the intrigue me, right? And yeah, I mean, I trade with Juicy, and yeah, sometimes I go there in Discord and we trade with them. But what Michael said, it really touched me because I'm a man of faith. So when Michael says something, yeah, it really touches my heart. I'm telling you because it resonates a lot with what happened in my life, and I know right now how to, to manage myself better, right? Because Michael has something that I need, right? So that's why I listen carefully to him. That's why I really, appreciate him for what he did. And yeah, man, I mean, sizing down is important because it's the way you need to keep your money in this game, not to make money. You need to keep your money. Yes, you need to make money, but you need to keep the money. The longer you keep the money, the longer you survive. The less you keep the money, the faster you're gonna get burned. The more you size, the faster you're gonna get burned. The lower you size, the more you're gonna be in this game. Because this game is gonna reward you once you size down, once you're disciplined, once you do all the things. Because I'm telling you, Michael perspicacity is unmatched in this game. It's unmatched. Look what the community he built. Your unmatched perspicacity coupled with sheer, Michael. It's undefeatable. Nobody can be better than that you did here. And I really, really appreciate it. I know it's a tight horse right now, I'm telling you, right? But
Yeah. Fight
it's
Club,
Fight
buddy.
Club.
I
Okay,
got you.
okay. But
It's all good.
I really, find myself more and I feel like, I made it. Like I feel like I'm seeing results. I can afford do more things, right? And I feel better,
That's good.
And
Yeah, I love
sizing
that.
lower meant a lot. That changed everything. That changed because yeah, I know where the price is going. So I'm seeing where the market is going. I'm watching for price action all the time. Seeing those first presentations, seeing those quadrants, seeing those things. I mean, really, I don't think about making money anymore. I don't care about the outcome. I don't see it. I just want to see the charts.
That's very good, and that's I think what I mean. That's the struggle I think a lot of traders have. Alex is just that, and culturally, today is really nice. The way from the space, there's a
Yeah,
resonance, and that resonance within the culture, within the community, is less is
less is
more,
more. Exactly.
and and being about it versus talking about it is what we're all about, and being about it is really embodying who you are off of the charts as well as on the charts.
Exactly.
That's what I
Right.
like to circle back around, right?
Absolutely right.
And circling what we're doing off of the charts, our habits, our mindset, that's super uber extra important.
Exactly, man.
So um
That's why what
uh,
Michael said about when you spend the groceries, right? You spend like when you let's say you go in a trade, right? You trade with the lowest size, you trade with 1 micro, and if when he said about you spend the money for your child broke the toy, it's the same thing when let's say you lost $50. But why you complaining for that $50? Because we can spend $50 on something that they don't need, right? Exactly, it's the same thing. So the market when you lose, you're learning. You're learning, and then you will know how to size properly and understand better your parameters. You need to journal and practice a lot because this game is not easy, man. The first years you're gonna lose. It has to be. It has to be. You cannot. There is no way out. You need to just proper work. If you have a job, go to your job. It's important because how are you gonna survive, right? And go with a little smaller size. If you're in the first place, a lot of guys come to me. I'm telling you, I'm swear to my God, that all the guys come to me. A lot of 70-year-olds come to me and say, how can I start this? I don't need to trade ICT. I say, listen, watch Michael stuff for the beginning. I do this, and don't trade. Be in a demo, as Michael said. Stay in a demo, right? All the time, stay in a demo, right? So trade with the lowest size, right? And then you're gonna go for there. When you're gonna get live, the smaller size. Does not burn your ass off. That's you need to keep the money, not make money.
yeah, I like it. Alex, bro, we got a bunch of folks here. I'm going to circle around just a few more. Added a few speakers here. We're going to keep the conversation going, keep it flowing. Thank you all for being here. Thank you for being here at Trader Roundup. It's Friday. Yeah. Did you guys get a chance to hear that song that someone made? Did you guys get a chance to hear that? I posted it on my feed. I don't know if I can play it right now. I don't really think it matters me playing it, but point is, it's a pretty cool song, and the community made it, and I don't know if I can play it. If I can, I will. 2 seconds. We're here. Here we go. Thousands of hours in the green, ICT on jet phone range. Watch me dodge the fall, futures on the panel. And cue my favorite bird. I live stream every session, every word you ever heard. But these new traders grassland fall in their veins, chasing every wick, using all their gains. We mean well in the roundup, trying to school them fast, drop the concepts, but sometimes it don't last. That's the code, baby. Push too hard on the new bloods. Brings the peace back on round up. We rise, from devils to the bullets, you can trust me. Oh my man, he crushed it with that song. It's 3 minutes long. He posted it on YouTube and DM'd me, and he just made that song all on his own. I don't know if you had a chance to hear it, but the words are really, really good. It's just something that's come from the community, so naturally I am like beside myself, happy about it. So it's very, very cool. Keeping the conversation going, keeping it flowing. Zazu, you there, buddy?
Yo, what's up?
Bro, I love the cat
I
profile.
appreciate it. I love it too. I love
Do
that
you have a
too.
question? Do you have tell us a little bit about yourself, bro?
Well, I'm from Tunisia. I'm 19. I've been trading for 3 years, almost 4 years, and it's been a long journey. You know, the type of journey that you have to have around for a long time for you to understand that you're doing the wrong thing. Like you don't just you do every single thing beside doing the right thing. And like it's been a long journey like that, and I want to share like my experience for learning how much you lose as a city is teaching now with one micro. I used to do it last year, for like before a long period when I started. I used to be so anxious about the size of my trade, even if it was so logical. Even if it was 1%, I used to even look at it as like 500, let's say 50K combine. I used to look at $500. That's too much of a money, like let's say in my country and stuff. And that made me so anxious about the trade. I was literally I couldn't handle the risk. I couldn't even handle having a trade on. And it was like
So what did you do, Zazu? How did you navigate those emotions?
I had to accept, I had to lower the size. And I was in that time, I bought like I moved to Future and I bought my first combine. And I was like, all right, I had 6 months after like 2 years of having around all that shit. That was the account that I need to pass this account. Like it has to happen. We've been 2 years in this. We've been like fucking around and we find out we done so well last period. We need to do it now. This is the moment. Like if it has a moment, it has to be now. And after just less than 5 days, 3 days, the account was blocked. And I was so anxious about even placing in one single position. I couldn't do it. I couldn't handle the pressure of having PNL ups and down. And it was crazy. And I was like feeling like what should I do? And I was listening and remembering ICT saying, you're doing it wrong. If you're anxious, lower the size. And logically for a combine of 1%, that's logical to risk 1%, but I couldn't even risk lower. And I was like, I need to pass this account. I have 30 days. I don't know if I can make 3,000 in those days. I don't know if I can pass it. I can't lower the size. That's what I'm supposed to risk. And the amount of anxiety that went, but in the end, it came to I'm gonna fail. Like I was listening to all the Twitter space of ICT and all like there's a lot of folks that doing ICT motivation speech, which I love them. Like I appreciate all their work. I listen to them every single day when I'm for a run, when I'm in the gym, when I'm even just walking. Like I try to put something good in my head. And all that time I was listening to, if you're not gonna do this, you're just gonna fail. And the amount of that I had to be broken inside so I can just accept I need to lower the size and it is what it is. And I was in need to pass that account. Like when everyone have some hard time with their life and they're anxious because like we know we took all those emotions outside of trading and we put them into trading. Everything we pass during the day, we put it in our charts. So the amount that I had was so much on me. And I was like, what you mean I have to do it? I have to accept that I can, if it's gonna happen, I have to let it happen. It's like, if it's gonna be a loss, whatever, there is another day. But that was the main problem. Like, I can't. Most of the anxiety is, I can't. It has to be this, it has to be that. When it has to be
And
nothing.
how's that journey been? How's your anxiety been? Have you made some changes?
Yeah, that was the time when I made the change. When I was I lowered the ego and everything, and I was like, listen, maybe maybe it's not gonna be this time. Maybe like, I don't know, maybe it's gonna be way more worst. Maybe it's gonna be better. I'll just do what I'm supposed to do. Like, let's just give it a try. Like, let's just let it go. That's all was what I was hearing ICT telling me in the background of my head when I just open the chart and I'm hearing what I'm supposed to do and I do the opposite. In that time, I was like, let's just do it. Only this time. Let's just try it. And I was literally, go like up on the account for 3%, 4%, and then I go to minis and I lose 1,000, which is what, like, every day you're gonna have 2,000 as drawdown. So
Oh,
now
yeah.
I've been in 1,000 drawdown, and I recover my drawdown with one macro. I used to have
And so that's awesome.
1,200 with one trades with one macro, which it's it's not logical for people right now. What you mean you make with that with a one macro only? And like, the main thing that made me pass that anxiety and everything, it was just letting it go, just letting it go all and low, so I can lower the risk. That's what I think. That
So deleveraging and trusting the trade. That was your answer,
yeah,
Zazu?
just
I like that.
just trusting the trade. If this one is not gonna be win, maybe the next one tomorrow can be better. Just let it go today.
Detachment.
Yeah, just keep. Yeah,
Detachment
that's
from
exact.
the outcome.
Yeah,
Focusing on the inputs.
yeah, and
Letting the outputs be what the outputs are. It's so much easier said than done.
yeah,
And I know that,
it's
and we
hard.
all know that. It's easy to say that. It's difficult to do that. So when we want to be about it and not talk about it,
True.
how do we be about it and not talk about it? You don't just make it a rule that you can't trade anything but that macro, that one micro. That's all you get. One micro. That's it. No minis.
Yeah.
Could you enforce that rule on yourself in your business?
Yeah, but you has to be calm with yourself. You has to be, you has to stay alone for a little bit and be calm so you can deal with yourself and let that happen.
How do you do that? How do you do that in Tanzania, Zazu? How do you do it?
Like, my entire time, I just spend it alone. Like, I don't go outside with anyone. I don't talk with anyone. I just take my AirPods, I go for a walk, I listen to ICT Twitter Spaces, and I'm like, I has to be friend with myself. Like, if I'm gonna try to do
Hmm.
it and then I'm gonna like break my own stuff, like, come on, like, I'm my biggest hater. Like, if everyone is just like hating on this, let me work with myself, like a team, like a duo with myself. That's how I was listening every time, and I try to apply. That's how I try to apply everything I see tell me. Like, it's like I'm raising a kid slowly, like that. And that's how I applied it. Like, you can't say you have to just detach yourself from the outcome when you having a lot of troubles in life and you're seeing yourself in a
Well
losing
said.
day. I couldn't do it the first time until I went a little bit by myself alone and I had to let it go. Like, we'll find out. Like, if it's gonna be worst, if things gonna be worst, we're gonna find something to do. But let's just keep this thing, this trading, this business. Let's just keep it goes by those rules. We're gonna figure out the other things. It's more likely the anxiety and all those. It's more likely things outside of the charts. It's all. That's what's always been. But it's
So in Tanzania, when you have a bad day, charts you took a trade, instantly went to drawdown, maybe you took an L, you lost, you were wrong. What do you do?
I just try to go for a run, or I go and watch the sunset in another place, and I just listen to ICT and not just videos about concept, all those motivation speech and self-talk.
Right. Yeah. So you really just kind of try and dial in to yourself,
Yeah,
and you focus on introspection, and you utilize isolation as a way almost to meditate. Is
yeah.
that right?
Like it's like self-talk. It's like
Self-talk. I like, yes.
yeah, like
Affirmations, right?
it's like I lack something with my brain. My brain is doing something, and he lack information to stop it from doing it. So the way that I listen to I see, like, because you can't know what you don't know. You need somebody to tell you that. So I listen to all those stuff and I try to apply them as me speaking to myself, as me trying to raise that little thing inside me, that sub mind. I try to reprogram it, and this, and slowly, like, you can't be inside noise, you can't be around people, you have to be long period, so lonely, so you can fit, but with yourself, alone but not lonely. But yeah,
I like that. I mean, that's a good answer. I mean, you're in Tanzania, and we're a global audience, and we're all in different places, and we're all doing different things, and it's good to kind of hear the different stories from different people around the world talking about how they trade, how they cope with loss, how they try and manage themselves off the chart as well as on the chart. So, Zazu, thank you very much,
appreciate it.
and I really appreciate your story.
Thanks. Just one little thing, because I can't go and let this like inside of me. Like, I really want to thank. Like, I really
Of course, I understand.
I can't go without letting it out. Like, I really want to thank ICT. Like, thinking about, I always sit down and think about, like, if you're somebody from Tunisia, you're somebody in Africa, you're you literally forget about future. Think about life even. Think about how you live. It's so miserable, it's so bad, it's so hard for peoples. Even inside the world, even with all this inflation and all these things, it's so bad. And having someone that open a different door for your life, change it. Having someone that literally care about you as even your own family doesn't talk with you like that. Having someone that grown, that is like raising you as a father, as a friend, as all that, like, there is no way that you can tell how much thankful you are for that thing. I really appreciate it so much, how this changed my life, how this is gonna change even my next generation of the family lives. I really appreciate. Thanks so much. Like, I literally have this inside my heart for 4 years, and I really
I
do
love
appreciate.
I love it. That's so
It's
great.
beautiful.
I know Zazu. Yeah, it really is. It really is nice to see. It's a really it's a touching story, and it's unique to you, Zazu. And your story matters. and your journey matters. And we're here to help you in whatever way we can validate that story, help you find success and cross the finish line. And that finish line is just you being the best version of yourself, you know?
Yeah, appreciate it.
Much love, buddy. Zazu coming to us. We got some hands up. We're having fun. Just gonna keep the conversation going. Lunatic Algo, what a name. How's it going, buddy?
What's up, Kitt?
How you doing?
Doing good. Hi, anchoring back to the using just one micro, dude.
Using
That's
just one micro. Do me a favor. I know you've been on before, but real quick,
yeah.
name, age, where you're from, how you engage
Oh,
with price, and then jump in, brother.
I am Dominican from the Dominican Republic. I've been trading for 3 years. I've been profitable for 6 months, and I am from New Hampshire, but I'm New Hampshire, United States, obviously.
Yeah, well, yeah, I could tell you had a really heavy New Hampshirean accent there.
I still have.
Hermano, estoy bromeando contigo, güey.
Yeah, I really do have a
I'm just playing, bro. It's a real heavy
Nah, I've been in New
Dominican. I
for
mean,
12 years, man, and I can't get rid of the accent.
I know. I'm playing. It's not a heavy accent. You absolutely sound like you're from New Hampshire.
I mean, I know, I know you Brazilian, so you follow Portuguese também, a little bit.
Então, velho.
Yeah,
Então. So that's cool.
então,
That's cool.
man.
That's cool.
Yeah, bro.
So all right.
So listen, my thing with the one micro, dude, I blew up accounts with the whole minis thing. I used to buy the prop firm accounts. You know, they used to be 90% off, whatever. Boom, blow it with the fucking minis and all that. Sorry for cursing, but blow it with minis all the time. And I used to lay back and say, "Oh, it's only $20." Dude, that shit turned into like $500, and I was like, you know what? Something is wrong with me. It's something wrong with me. So it was nothing bad with the concept or anything. It was just something that it was holding me back. Like I put in a trade. I used to see that the stop loss was $500, but I could make 1,500. I used to see that thing goes to 250. I used to close it, and then the whole trade used to go boom right to my target. And then it was something inside of me, right? Because I didn't want to lose. I just wanted to win and win and win and win. And a lot of people, I see a lot of people that be like, "Oh, ICT concepts don't work. ICT does." What doesn't work? It's you. Like it's really your mentality. As soon as I switched to to micros, dude, I've been killing it for 6 months. I could show you only one contract, only one mini contract, and a lot of people.
So you're exemplifying what is being done in the mentorship right now. Over this last 6 months,
Dude,
this course, this decision making, what you're seeing exemplified by Michael real time right now. This last week, with Cam, you saw that. You felt it. You've seen it over the last 6 months.
dude, the over complication that we do on the other stuff, even though Michael simplify it all the time for us, but I do believe it's the fact that a lot of people just go out there and they start making Frankenstein stuff. Like I even seen some dude make the macros, put 10 more minutes in there just for the fuck of it. Like he just gave us literally the 20-minute the macros, and I've seen people just doing Frankenstein stuff just for the fuck of it. Like he literally gave us the rules of the FPGA, the fair value gaps, the rules for the order blocks, the rules for every little PD array, and we still overcomplicate the stuff that he puts out there just for the fuck of it. Like I really don't understand. Once you start violating all those rules, you're not gonna get there because you're just really making something that you're making it up. You know what I'm trying to say? You're just putting stuff up that you made it up on the way. And dude, as soon as I oversimplify, literally only on one PD array, like Michael said, and then you understand how that PD array works, and And literally, my model, it's literally, it used to be 30,000 things that Michael spoke about. Like I used to do, all I do is literally get a range, get the 50% where it is. Well, obviously the all the sessions, like Asian sessions, London sessions, like mine is easy. I only trade in New York, so I plot in my Asian
Okay.
range. I'll see if the Asian range it was rated. If it wasn't, I know there's liquidity up there. Obviously, that's ICT 101. If it wasn't rated by London, I know where there's a little. So you got Asian and London right there. That's liquidity right there. And if it didn't get rated, well, A to B, narrative. Your narrative didn't work, you don't take the trade. You know what I'm trying to say? But a lot of people try to push it. A lot of people they bring their own problems into the chart. It's easy, dude. It's easy. You don't have to overcomplicate.
Let me ask you this. How are you making the situation better for yourself? How are you applying what you're learning real time to
Disconnecting myself from the money. Like you just
Okay.
trust the process. Obviously, if you're not working with yourself, you shouldn't be working on the charts. You gotta get closer to Jesus, man. You gotta have at least go to the gym, at least run around the house. It doesn't matter. Put your body.
So working on yourself, having a relationship with God. These are things that you are actively doing the last 6 months as you've been finding
Yep.
profitability, and you're transitioning to an over leveraged position into a properly leveraged position, and you're detaching from the results.
Yes, sir.
So that detachment, and then also working on yourself outside of the chart is what you're saying
That's the most important.
is all right. I like that. So the gym, what about, are you doing anything with diet? Do you really care about diet? Just curious.
Well, dieting right now for me, it's not that crazy. I do go to the gym and all
I was
that.
just curious. I mean, some folks it matters more. I was just wondering what it was for you.
I'm trying to gain some weight. Yeah, I do. I try to reach my calorie intake. I'm really skinny, kid, dude. I'm like,
Oh, right on, bro. Right on.
120. I can't gain weight. I can't gain weight, dude. So I try to meet my calorie goal every day, 3,000 or more. But that's my lowest. I try to reach my goals. So trying to be disciplined. That's another thing. If you don't got no discipline, that's another thing. Everything is a process. So if you going in the chart.
So would you say you're more disciplined today than 6 months ago?
Yeah,
A year ago?
Yeah, because once you start making everything a process, so like if you go to the chart and you don't see that nothing aligns with you, or you don't see anything that you understand in there, just get out of there. Like I said, if go in with your model, don't go crazy in it. You don't have to complicate it. If you see that it's like a barcode, like ICT says, don't even engage. Just wait a little bit. The charts are not gonna run away. It's like everything in life. If you don't got no discipline, you shouldn't be. And also don't risk what you can't afford.
I like that. That's a good one, bro. That's a good one.
So yeah,
Those are very good rules, very good application
yeah, and don't
of what you're learning and applying real time.
That's pretty much it, kid. I'm gonna let somebody else, because if we keep talking here, we're gonna.
All right, yeah. AM's got his hand up. We got John Zorbas here. We got Poppy Trades. So we got some folks here. AM's up next, though. Thank you, bro. My New Hampshirean Dominicano.
Ya tú sabes.
Ya sabe, hermano. So, my boy, the Dominicano Loco, and now we got up AM. AM, what's going on, buddy?
Hey, Kit, thanks for having me on. My name is Arsen. I'm an Armenian American from Los Angeles, the worst time zone to trade in my opinion. Nobody wants to wake up at 5 o'clock in the morning. I'm 23 years old, and I've been trading since around 18 during the COVID boom. I made some good money back in stocks. Everything was pumping. It was a lot easier back then. At 20, I started ICT, but I never really did anything right. I never journaled. I never back tested. I never really watched all the videos to completion and studied them. I was real young and real reckless, and I'm paying the price for it now. But it's been around 8 months now, and I've been journaling, I've been back testing, I've been studying, and I have to say, man, to anybody who doesn't do that, they think it's not important. I've learned more in these past 8 months than I have in the 3 years that I've been trading. It's ridiculous. But about my trading style, I love market maker model, and I use it as a contextual framework on the higher time frames, like the 4 hour and daily, to kind of understand what smart money wants to do, where they want to go, where they're trying to push price, and how they want to do it. And then on the lower,
Well, let me ask you this. So, are you grading wicks now within your intraday logic and
I've
directional
actually been I've actually been
trades?
grading Wix for around 6 months now, but I was never using it in the same way that ICT has been teaching in his latest videos. So now that I started applying it in that space as well, I'm getting better PD arrays to enter off of. I'm learning more about the stages of the market maker model and the appropriate stages for the entry. So yeah, I did start that. And I'm not just grading Wix either. I'm doing all the imbalances, I'm doing the gaps, the end dogs, the end wogs, and I'm keeping all that stuff on my charts as a historical data.
Okay, okay. I know Michael's got to love hearing different folks and how they're utilizing the concepts, because this is, again, it might not be feedback exactly on, today, but getting your thoughts and 2 cents on how you're applying the concepts. I know for sure Michael's heart is glowing right now, beaming with joy, listening to folks talk about his concepts. So I know that for a fact. So, AM. Talk a little bit more how you're engaging with price and what you're seeing and how you're applying the mentorship real time, because that's really what this conversation is. It seems that we're morphing into how are you applying the mentorship real time to your
Yeah,
trading,
so
right?
on the lower time frames, I generally stick with if it's a real clean market maker model, I'll trade that. If not, I really prefer the first presented. I've been using it since 2024. It's real easy, real quick, and quick to spot, easy to use, and I do love that. And yet again, I'm applying the wicks and the gradients of those wicks to that as well to get a more appropriate entries and get a better read on order flow. As far as my trading goes, I feel pretty confident in my trading. I like my technical analysis. I feel like the only problem I can spot from an external viewpoint into myself is impatience. I've always kind of been an impatient person. Living in Los Angeles is a real hustle culture over here. You gotta always be on your feet, always be moving around, trying to get those bills paid. So actually for Lent, I made a promise to myself. I made a promise to God that I'm gonna be focusing on patience. I'm gonna be studying it deeply. I'm gonna try to remain in a state of calm behavior and really work on that.
I love that, dude. I love that. We hear folks who are Christian, folks who have different faiths or beliefs. If you understand or have heard of Ramadan and what Ramadan is, it's something, the idea of sacrifice for a higher being, for a higher cause, that is such a beautiful, wonderful practice. And it's being done in the name of their higher power and who they are sacrificing to. And I say they, it's with love, guys. We all are here. We're all together, but I don't practice Ramadan. But my point is you can still practice some form of sacrifice and not entertain, these dopamine things, these applying discipline within a higher power is a very, very, very good thing. And as traders and as an individual, you will really blossom on that journey of restriction, of taking away and really, really stripping down your just habits, right? Abstaining from specific things like food, fasting, or negative habits really force you to reflect. And within the Ramadan, within the Islamic faith and within Ramadan and within this practice, I believe it could be an interfaith practice where there's the idea of Lent, and Catholics give up something that they like, maybe sugar, sweets, chocolate, something in the name of Lent. But this idea of abstaining from, restricting yourself from, limiting from, and then being mindful, observing. The whole point I can't, again, my Muslim brothers, I love you. I don't practice your religion, and I'm speaking on it. So please, I'm not trying to be disrespectful. But what I am trying to say with love is this practice of restriction in the name of a higher power is a very, very rewarding thing that has a compound effect. That's all I got. And if any of our Muslim brothers want to speak on Ramadan or what it means to them, I would love to invite you to the conversation now that we brought it up, because I am not a person that can speak on it. But I have done a lot of fasts, and I've done a lot of restrictions within my own lifestyle with an observation. When you can restrict to observe, it becomes a journey, because the point of observation and where you're at after the fact, there can be revelations, insight, and that is the journey. And I believe a practice like Ramadan is something every year that folks are forcing themselves to recalibrate their earthly flesh desires, and they're trying to recalibrate with their higher selves and with their
Yeah,
higher
exactly.
power. So I have mad faith and respect for that. And again, I can't speak too intelligently on it, but I am touching upon it. So I'll say my 2 cents. But AM, you make a great point. Restricting things, putting yourself on a quote unquote diet is extremely important as a trader.
Yeah, and I've always been a religious person. I'm Armenian, and Armenia was one of the first countries to adopt Christianity. And ever since I was a little kid, my mom's always taken me to church and made sure that, I always had a presence with God, and I always had a faith to kind of feel a part of, and have somebody to look up to and to seek for guidance and everything like that, which I love. And I have to say that after meeting Michael as well, I've only grown closer with that faith and with God, and I really do appreciate that as well, and everything he's done outside of trading. But Fight Club rules, I actually do have a question, Kit, and I was hoping that maybe you can help me out.
I love that. Look at the self-regulation there. Gents, go ahead,
Yeah,
bro.
so my question regards first percentages. I do love them, and I do mark them out on a 5-day historic period plus current day. But I've been noticing that these first percentages, they're a lot more powerful than I originally thought. I see them being used in as pivot points and price runs and price legs. It can be, I've seen first presented 9 days old, 10 days old being used for these kind of pivot points. And I was just kind of curious, when it comes to the first presented, is it just that New York opening range one, or is it every first presented from every opening range? And is it also, can you be including first presented order blocks in this as well, to kind of understand and get a better read on order flow and the historical data?
Michael?
The concept of first presentation, it's not limited to New York. Obviously, there is a London session. There's the pre-session, 7 o'clock in the morning to 9 o'clock. Yeah, a 2 hour window right there we can trade. The first presented fair value gap at 8 o'clock, because you have news coming in at 8:30, whether there's actually news on the calendar or not. Do some study on that. You'll also see it's very useful. But I'll drop this for you. When you notice that there are first presented fair value gaps that are being utilized that go back further than 5 days, the rule was just generally to give everybody something to have on their chart, but not inundate themselves with too many things. Too many things in the beginning is going to be a problem, because then you're going to feel like, well, good grief, like I have all these things to choose from. How do I make a choice? It's like going to a buffet and you're starved. So when you go in the beginning of your studies, just have a handful of them. Like 5 is enough. 5, look back on the new week opening gaps. So you have 5 weeks of that. You have 5 days of new day opening gaps, and you have the 5 most recent first business fair value gaps in the opening range at 9:30 to 10 o'clock. If you have that, you have all the key levels with the exception of whatever the opening range gap is, that forms your regular trading hours opening range gap. that for that given day, and just use that for the last 3 days. So you have everything that you would ever need to find a consistent run of price action that you will never need to look at anything else. You don't even need to look at previous days highs and lows, no week highs and lows, nothing. You don't need to know any other PD arrays. You don't need to do anything. That in and of itself is a universe that completely supplies all of your needs for framework for any and every trade. Now, when it comes to your statement about you've seen first business fair value gaps that were used, again, that are 9 days old, X days old, what you're probably not noticing is you're looking at them being utilized when they're in previous sessions. So in other words, if you look back, go back in time where yesterday's Asian session rather, and then or look during the London session, wherever the highest high and lowest low during the London kill zone. You'll see inside of that, this is the benefit, this is what you're supposed to have seen and noticed by me dropping the breadcrumbs. If you look at your old data, if you're looking at all of your old PD arrays, and it's not limited to fair value gap. So yes, it is first presented order block, first presented breaker, first presented institutional order block, institutional. All of these things have a purpose. And you're not forced to only use first presented fair value gap, and there's no other concept around that uses first presentation. It's applicable to all of them. And I don't want you to take my word for it. Go through your charts and study. You have a whole weekend ahead of you. You can be so much, put some good music on and go through your charts and you'll be astonished. But looking at old first presented fair value gaps, you'll notice that they are forming in relevant, salient to you right now, previous sessions based on the current market structure. And what do I mean by that? Let's assume for a moment that you think that the market is likely to draw higher because of the daily chart. We're bullish. We think it's going to move higher. So therefore, on the daily chart is 500 handles higher than we are right now. Okay. Looking over that 500 range or 500 handle range, go back through old data and you'll see, if you've been keeping your data, that old first presented fair value gap just so happens to be in a Asian session or a London session 5 days ago. So that's why it becomes much more salient, much more useful, because it's grouping not only its first presentation, but it's also incorporating its place in a unrealized dealing range where it's likely to go to, where it's likely to draw to. It's going to act as that, here I am, I'm going to pair up with what price is at right now and the time it's at. Here's where I'm going to meet. Think of that multiplication table analogy I like to use. You have two axes there. And when they agree and they meet, that's when you have a trade, or that's where you have an exit. So by looking at old sessions and where the first presented fair value gap forms in those sessions, whether it be Asia, whether it be London, whether it be New York, pre-session New York, lunch, the 2 hours of lunch, there's a first presented fair value gap and first presentation there as well. Start at 11 o'clock. And that is useful throughout the rest of the day into the close. So it's not limited just simply to the New York session.
Yeah,
Mentorship quality information, boys and girls.
well, thank you. I never really looked at it in that way, but thank you. I'll definitely go ahead and take this weekend to really delve into the topic and do some back testing on it and see what's how to look at it more in that light during the live trading session.
I just want to mention this to the folks. If you're listening, Michael is rewarding you with good questions. So come to the microphone and have good, thoughtful questions, because if you have thoughtful questions, you're going to get a really nice, thoughtful response. And I think that's just kind of back, and it's synonymous to, input and output. So really, really, really focus on what you want from this conversation with Michael and within the community. And I think AM just had a really good output from some really good question, some new information, an opportunity for you to study. So thank you, Michael. And Sabaflab has his hand up.
Yeah, my mentor said he spent the first, I think, 6 years of his journey focusing on mastering the power of three. And whenever I hear my mentor talk about reference points relative to time and the development of specific arrays, it's really encapsulating the reference to a specific price point. And so if in my day or in my hour, for example, if I'm looking at the 4HPO3 of 10 o'clock, and I'm utilizing what is presented below or above the opening price relative to what I'm looking for the draw on liquidity, that presentation of the array carried out through time is what allows me to read the institutional order flow relative to my drawn liquidity, which also allows me to determine what price level institutionally. So say we're dealing at zeros, so it's 29,000 flat, and now we're dealing above that. It allows me to read the price delivery and the repricing above that institutional price level to the next institutional price level, as well as objectives being realized or unfavorable market conditions. So for me, whenever I hear it's the first presentation breaker, the first presentation fair value gap, it's reference to the actual PO3 sequence in development. And that's what allows me to actually gauge the daily PO3 much better, the 4H PO3 much better, and specifically these hours much better.
Bang. That is absorbing. That's absorption right there. We're not talking volume. We're not talking about the market. We're talking about absorbing the content, really able to assimilate and understand. And Sabian, you do a great job of that, by the way. I mean, the way you articulate PO3 and market maker models, I will say, as witness, it is impressive. So Michael mentioned to me that he thought my understanding or was broad, and I'll say this, Sabian, you and the market maker models with the PO3, I think you do a good job of explaining it. So kudos to you.
I appreciate
And
that.
I'm sure that the community will also appreciate, the extended ways in which each one of us are trying to pontificate further upon Michael's concepts. And PO3 and Sabian, I tell you what, he's really good with it. Really, really good with it. Keeping the conversation going. 5:46. Jumping into macro here. Just a few. Like the time. We got John Zorbas and Poppy Trades. What's going on, gents? John, you're up first. John, bro.
Hello, can you hear me?
What's going on, buddy? Yes, sir.
How's it going, Kitt? How's it
Pretty
going,
good, my
ICT?
friend.
Appreciate you having me on. I just wanted to ask a couple questions. Keep it short and sweet. First off, thank you, Michael, for everything. Definitely changed my life as far as being able to read price, so appreciate that. Get that out of the way. Two questions. The first one is, this week I found was a challenging week. Like I usually find my levels on the 15-minute, hourly, and 4-hour, and I try to find my 1-minute model in order to take the trade. And I found this week my 15-minute levels were lining up perfectly, like order blocks, everything. But then I couldn't, price would just expand so fast, and it wouldn't give me a 1-minute model. Is that something that normally happens like once in a while, or maybe I'm just missing something? I kind of just wanted to get some insight on that. Like, does that happen where you just miss the price runs because the levels it's too choppy? Does that make sense?
I
Do you
mean,
understand the question?
I understand your question, and I just want to go back to the weekly profile.
Mm-hmm.
If you had a hard time this week, we're in a doji.
Yeah.
So we're in a high resistance. So when you find that weekly open and we symmetrically swing below and above, and then we're in the latter days of the week and we come back to the weekly open, what's that telling you? That expansion is coming, but it's not right now.
Yes, that's true.
So
It had
you're
just been a while since I experienced a week like that, so it just kind of caught me off guard.
please understand OPEX, third week of the month, right? You're dealing with that right now. So you're not going to get the market spooling the way you want in favor of those options. They're not, those options plays are not going to make the money. They got to burn in theta. That's what you saw today.
Yes.
That's what you saw
Yeah.
today in relationship to the week. It's called theta burn. And it's also a weekly doji. So what happens after high time frame compressions? What happens?
Expansions.
All right. So what's coming next week or the week after?
Yeah, no, you're right. I agree.
I don't know anything about anything, but I know a doji is the precursor to a range that will offer expansion.
I agree. No, that's true.
If I
It's
may,
just frustrating because even to, yes, of course.
Go ahead, Michael.
I know it's. I feel like I'm beating a dead horse here, but you know, it can't be overstressed that what we're seeing in price right now, the prolonged contractions that just it's strangling the marketplace. You're dealing with the potential of World War III any given week. You got the globalists. I fucking refuse to call them elitist because they're not anything. They're not elite. They have a lot of money. They're in control, but they're not elite. They're globalists. They have all these individuals now that have who just came outside. It makes me wonder what you're doing. If I'm hearing everything, I'm like, what the hell's going on there? So you have all these people that are being exposed, you know, and these people have a lot of influence. They have a lot of influence. And by having an appreciation for black swan conditions, you know, silver is not the only one that's going to happen this year, folks. Like it's not going to happen. And there's a lot of deep pockets. That means people with a whole lot more money than all of us collectively. They are not in the position of throwing darts and seeing if they can win a game of chance. They're just not doing it. Okay. So because they're not pushing in their participation right now, you're seeing these, you know, it's stunted little movements where it goes up a little bit, goes down a little bit. The moves are not prolonged. There's no follow through behind them. So you get range bound. So when you ask the question, you know, is there something that's off right now? You know, I feel like I didn't do it right or I'm struggling with this. I have rolled back my participation because of this. I told you, I'm looking for like one good setup a week. A lot of you guys forgot I made that comment, but that's exactly what I'm focusing on. I'm looking for one good setup that I know a lot of things are in my favor, and that's it. That's all I'm looking for. Now, am I in there tape reading? Sure. Am I in there practicing on a demo account? Sure. Am I in there working with my sons? Sure. But with my own capital, I'm not in there trying to trade every single day because I know what's going to happen is I'm going to do something and the market's going to say, oh, you arrived right on time. Rip, and I'm going to have a loss. Why do I want to take a loss when I know the probabilities of that being higher than it's ever been? Why do I want to do that? When I can simply wait and follow my models, follow my rules, follow the economic calendar, follow the ebb and flow, looking at the weekly profile. I know we're going to be in some range bound condition. So we're not looking for some extended run higher or extended run lower. It's going to just move around. And it's going to use the two primary points of reference I gave you this week, which was that daily fair value gap that I put the two black lines on, and Tuesday's regular trading hours opening range. Look what price has been done. It's been doing. And look at today. Yeah, sure, it went above it a little bit, but predominantly those levels were keyed off of, and as long as you were trading inside that range, the range of regular trading hours, opening range gap on Tuesday, and the daily fair value gap on NQ, if you just worked inside that range, you had setups you could have utilized. But if you're looking for something broader, you're trying to force your will in the marketplace, and you want something that it's simply not conducive for that right now. So it's not that something's broken. It's not that you're doing anything entirely wrong. It's just you're demanding too much out of the market when it's saying this is all I'm going to give you for right now. But the wonderful thing is we're going to leave this. I believe strongly that when we get into the spring months, like towards the end of March, going into April, May, man, we're going to have runs. We're going to have them. There's never been a spring where there has been no movement. It hasn't been there. In 34 years I've been doing this and looking back at old data, it's simply not there. It loosens up. Then in the fall, it does the same thing. So if you're struggling right now, the easiest thing for you to do is just take a step back and say, okay, nothing says I have to trade right now. Don't give in to that. I have to do it. I have to do it. Practice.
Gotcha.
You had another question?
Yes. I had a question about like the price delivery continuum. So when you have like these long these like when we were not at the all-time high, but before we had this big like $1,000 point drop, like was it last week or the week before? So about the price delivery continuum, like when there's a big swing coming, so say you have a model, right? Does the model play out like it'll play out on the 1 minute, and then it'll play out on the 5 minute, and then all working its way up the time frames? Is that kind of how the price delivery continuum works? I remember you mentioning it. I don't know if I missed that. Just kind of wanted to get a little more clarity about that. So like in the future, when I do want to turn,
I understand. I understand what you're implying. Like the market create. Let's just say for the sake of head and shoulders pattern. I don't trade head and shoulders pattern, but let's just say for the sake of head and shoulders pattern. You familiar with that?
Yes.
Okay. So what you're asking is if there is a daily head and shoulders pattern, if you drop down into a 4-hour chart, you'll wait for the right side or the right shoulder to form on the 4-hour, and you'll short something in that. But if you really want to reduce your risk, you can drop down to a 1-hour and wait for it to form a head and shoulders on that time frame. And then if you want to really make a smaller stop loss, go down to a 15-minute time frame or a 5-minute chart or 15-second chart and wait for that same right shoulder to form. I've had so many people send that as a question, and it was a really good question you brought it up because it allows me, again, to do a big broad brush response. That's not what this is, okay? What it is when you have a setup that forms from any time frame, okay? Obviously, it's not conducive for something on like a 5-second chart because you can't really reduce it much beyond that on the downside. But let's assume for a moment on a daily chart, you expect it to be a down close day. It's part of an existing price run. It's so close to going to a discount array. It's going lower. And you got about 250 handles of unrealized range before it gets to where you expect it to draw to on the daily chart. Now you have a bias. You're expected to see at lower prices. And then you go into your model from a 4-hour chart. You look for something that's going to form a PD array that's a bearish PD array, some kind of a fair value gap, institutional order flow entry drill, bearish order block, institutional order flow entry drill. When would you expect that? When it's got a really long protracted SIBI and there's no reason for it to trade in the upper half of that. So that means it's likely to give you a partial trade up into that. Then while it's trading up into that PD array on the 4-hour, then you can drop down to a 1-hour chart and then look for the very next premium array that you can trade off of there, or look for support of that trade idea if you're already in a position. Look for it to react off that, and that's the continuum. Where you're working from a higher time frame, it's just simply top down, but using PD arrays. It's a chain of command where price is controlled to this degree on this time frame for that PD array. Okay, it's already there. So now, what's it going to do in a lower time frame? Good question, man.
Awesome, makes sense. All right, I'm at work. I gotta hop back. It's been busy now. Thank you so much, Michael, for clarifying those things. Appreciate it. Thank you for everything. Look forward to everything else. Thanks, Kitt, for having me, man. Appreciate you.
Yeah, John. Great question.
Thank you,
Great
guys.
question.
God bless, man.
Keeping it going, keeping it flowing. Poppy trades. Are you there? Poppy.
Yo, what's up, guys? Can you guys hear me?
Yeah, we can hear you, Poppy. How you doing?
Dude, I'm doing well, man. My daughter just born last month. She just turned a month old today.
Congratulations. Hence the name Poppy. I get it.
Thank you. I really appreciate it. And I actually got into trading. So I'm 33. I got into trading because I got let go of my.
I like the age. Just real quick, I like the age. Go ahead.
Thanks. I got into trading because I actually lost my job in 2024, and you doing the usual classic bullshit that the retail does. And oddly enough, Zusi got me into ICT because he did the Words of Wisdom podcast, and he was so confident about price that I was like, yo, I gotta check this out. So I ended up joining the 2024 mentorship. I remember it the day, Monday, August 5th, 2024, ICT came live and I was a part of that cohort. So I'm a big user of the opening range gaps, new day and new weekend opening gaps, and then using obviously first presented fair value gaps, and ultimately targeting the initial draw, right? Which is just that fifth consequent encroachment of the opening range gap that you can go for. I'm just today, going through all of these funded accounts, getting funded, not being able to make the payout, trying to make it go too quickly. And now I find myself in a very tough spot because after, my money is running low and now I got to go back to work now because, and I'm starting a new job. So it almost feels like a failure, like I did all this stuff.
No, you can't look at it like that, bro. Especially being a father, man. I mean, you're a provider first. You didn't fail nothing. You're stepping up to provide for your daughter. So kudos to you, my man. You're doing it right. You didn't fail. You didn't fail nothing, bro. All you got is time. All right. All you got is time, and you stepped up. You took a swing. You didn't fail though, bro. I mean, if you want to talk about failure, I mean, I feel like I'm qualified to talk about failure. And what you're talking about, bro, that ain't failure.
Quitting
That ain't
quitting
failure.
is failure. As long as you haven't quit, you haven't failed.
No, I'm not quitting. So I'm in sales B2B. I'm in Paris, France. So targeting companies in the US. So I can work from home. I got my setup here. So the job is nice. It pays fairly well. The thing that I'm a little afraid of is ultimately working and then trading, because this whole time since August 2024, I've been learning and then started trading full time. Let's say trading funds in funded accounts, that is in 2025, early 2025, Q1
So
2025.
your model, where's your model? What session, bro?
Um, I currently focus on the AM, the New York
The New
opening.
York AM session is your primary focus, you're saying?
Exactly, primary session, because of everything I mentioned previously, right? Which is just opening range
So
gaps and
are
focus
you
on fair value
concerned
gaps.
with this new job? Are you concerned with this new job that you won't be able to trade New York? Is that your concern?
Yeah, or just maybe exactly to trade properly. Because
Well, let me ask you this.
yeah,
What are the chances or likelihood that you trade the overnight session? Have you tried to trade London or Asia?
I have, and I wasn't doing very well with that. I was trading. I don't think price moves as well, and for indices, they sometimes they do move and they move fairly well. I'm just I just realized that London is hard for me to do, and then Asia often consolidates,
Okay.
is what I've noticed, and
Okay.
you find
Well,
yourself.
real quick, within London, there's really specifically a few things of when not to trade, right? So we talk a lot about that. You hear Michael talk a lot about that in Core Content Month 8, episodes 2, 3, and 4, right? When not to trade London specifically. When we look at trading London, I'm only mentioning this, and I do completely understand. What is one of the times, or the number one, I won't even ask, economic calendar is going to be the number one driver for you and your relationship with London, okay?
Okay.
The economic calendar. And then also the price movement out of Asia. If you have a large range expansion out of Asia, what happens in London? We already know. We already know. We consolidate. So there are going to be times in which I'm just saying you trade New York and you're starting a new job. I understand maybe I don't want to convince you to take on a new session or anything. I'm just asking that maybe you look at applying your model fractally in maybe a different macro, a different time-based range, so that you can focus on work, brother. That's what I'm saying. Like,
Yeah,
that's it.
definitely. I mean, the good news is that, like I said, I'm in Paris, France, so I'm 6 hours ahead of you guys. So that means that when New York opens, it's about 3:30 p.m. here. So the day is almost done, and working from home, I think what I'm gonna do is just kind of get started early. So I'm planning that out. It hasn't started yet, but it's really that that feeling of like, hey, I've put in all this time, and I'm not exactly where I want to be because I'm getting payouts, but it's not consistent. It's not, the money isn't there, and it's quite a challenge. And now to kind of have to go back to work and to I made the mistake of telling too many people I started trading and all this and all that. So I think moving forward, I'll just keep that to myself and just build up to get enough money, to have enough money saved up, so that I could potentially think about leaving that job ultimately. But
Do you really want to leave that job though, bro? Let me ask you. If you have an opportunity to collect two incomes or one income, Is it that bad to collect two incomes?
No, definitely not that bad to collect two incomes. It's just B2B sales, and I know how it is because as soon as you start to sign on the dotted line, you're making, six figures. You spend a lot of your time doing that, and it's very, very demanding. And I know the work it takes to do that because that's what I was doing before, and
Yes, sir.
it takes a lot of energy because you're in.
So you're afraid that your current job is going to consume
I haven't started yet.
too much energy or time for your trading. Is that what you're saying?
Exactly, and me not be as sharp. So I'm just curious how you guys, the people working, are dealing with it.
Well, real quick, answer the question yourself, and then we will stack on top of that, brother.
Okay.
Answer it yourself, and then we'll get Michael and a few other folks' opinion on this because it's good. It's a good question. You're starting a new job. You didn't fail as a trader, but how are you going to manage moving forward?
Well, like I said, I think I'm 6 hours ahead, so 3:30 p.m. my time is going to be 9:30 a.m. New York time, right? Because I'm 6 hours.
Do you trade macros? Do you trade macros currently?
Yes, I do. I trade macros. I don't utilize them like a ton because the opening range gap within itself is a key time, that 30-minute.
Yes, sir.
So I primarily focus on that and the like I said, the initial draw to reach that consequent encroachment with the first presented fair value gap. So I have an idea of what I want to do, but you know how it is. You have a plan, and then there's like what ends up happening whenever you start. So I haven't started yet. Hopefully, I can come back. I start end of March, the 23rd of March. So hopefully, when I get started, I can come back and tell you guys how I'm focusing, like doing that, and how I'm managing both. I was just, curious as to how people are managing that. And then also I had one or two questions for Michael very specifically about first presented fair value gaps and then opposite first presented fair value gaps. I know it's not something that we've spoken a ton about, but that Trades Don't Lie had mentioned before, and that you had
Yeah, we've got that codified. I mean, Trades Don't Lie codified, the first and the last presentation, right? Every hour?
Yes, exactly.
So you gotta follow. I gotta follow up with you. You came with a lot.
Yes, I did.
And I'm not sure where to start. So do you mind re-asking your question? The technical question I thought was pretty applicable as far as like extracting a response now and being valuable for folks. The second question, I think it will be a little more specific to you. So, but if you don't mind asking them again in the order you'd like to answer, then we'll just work on it.
Yeah, exactly. So for Michael, the thing is for Asia, I've gone through a lot of the content, but I'm having a hard time. Like, what's the specific Asia opening range? Like, what's the 30-minute Asia opening range?
He mentioned that on Trader Roundup 3 weeks ago at 1900. Not that. I mean, you might not have been here, but 1900 is our opening range with Asia, and I didn't mean to answer for Michael. I'm just reiterating he's already answered that question.
No, that's what I was just curious because I was thinking perfect. That's perfect. So 1900 to 1930. And then the last question is, since today first presented fair value gaps are, you mentioned that if it's less than 10 points, you don't utilize it just because of the volatility in the market today. For the opposite first presented fair value gap, meaning the first presented fair value gap that's opposite of the first presented fair value gap that occurs whenever that first presented fair value.
So what you're saying is if the first presentation is a BISI, you want to see the first presented SIBI. Is that correct?
First presented SIBI. But the thing is, we don't necessarily consider the first presented all the time as the first presented. Let's say the first presented that we actually consider is the second or third fair value gap, but that's different than the actual first presented, right? So meaning if the second first presented, the first one is less than 10 points on the NASDAQ. Let's say it's like 3 points and it's a BISI, and then the next one is actually a SIBI, and it's 10 points. Which one do I consider the opposite first presented fair value gap? Do I go back to the first one and keep the second one as the opposite, or do I just use the first one? I don't know if I'm making sense.
Well, first, I didn't fully explain. It was a question presented to me by another student during this forum, and they
Yeah.
asked, is there a first presentation of an opposite, for instance, if it's a BISI that meets the criteria of a first presence fair value gap, and say it's a buy side imbalance, sell side efficient, that means it's an up close candle. The very first opposite SIBI that forms, is that a thing? And I said, yes. Do some research and collect some information on it. I think you'll be pleasantly surprised. And I said I was going to defer any discussion on it until a later time in print, because there's too many people taking my stuff and running it through AI and creating these little books they can sell up on Amazon. So I haven't fully disclosed it. So I don't have an answer right now for it, but I have an answer that'll come.
Okay, interesting. For the other people that really want to know about that, I have been using it, and I have been using those very two things. And what's interesting is oftentimes whenever the first presented, for anyone that wants to know, is at the bottom, almost of a V-shaped reversal, and both of them overlap each other. It's often, a very strong BPR, a very strong balanced price range that often leads to a reversal. For everybody that wants to go check that out in their charts, I was just very curious. So I'll wait on the books, and I'll wait on the books to make sure that we get that information. Thank you. And then just the last thing, which is just for the people that are currently working and trading. I think that's more of like a wider community discussion. I'm curious how you guys are managing it, and any tips that you could have for me as I'm looking to, have a stable income and also trade at the same time.
Well, as soon as you say that your job's very demanding, we all can agree, because we all either presently do it or we've done it. And what's more demanding is when you don't have that guaranteed paid income at the end of the week or biweekly, and you have to find a trade to make your ends meet or make your bill money or make your money. That's even more demanding. And all of the students that moved and migrated from being profitable, slightly profitable, barely break even, to then consistently profitable but having their job or running their businesses, and their desire is the same thing like you communicate here, like you want to do this full time and you don't want to be distracted, you want all the availability to just focus on trading. That sounds like, to me, and please don't be offended by it, it just sounds like you have in your mind, you've envisioned like you got to be in every session, every move, every day, and you don't have to do that. But you do have to be profitable if you don't have a job. So that compounds the difficulty, because when you go into drawdown, when you don't have reserves, that means your cash reserves have to be ample. So that means trade while you have a job, build those cash reserves up. 2 years living expenses to me is the absolute minimum before. Now things are harder. Everything's nuts. So honestly, 3 years, and it sounds like we're kicking the can down the road, but do you want to succeed at doing this and do it properly, or do you just want to just have a stab at it? Yeah, I'm a full-time trader. This is all I do. I earn my money from here. Well, how well are you doing? Well, I want to talk about that. So you want to be able to do it profitably. You want to be able to be solid, not rushed. And if you have a couple years behind you in living expenses, that's the same thing as having a job where you have reserves to pull from. You don't need to make that money in that trade right now. So that way you're not forced to over leverage. You're not forced to hold on to the idea when your system and model is telling you you should not be in the trade anymore. Something's shifted, something's changed. You'll be more sensitive to that versus, yeah, I feel it. There's a disturbance in the force. This doesn't feel right, but I got to trust my model because I need this to pay out. You see what happens there is it becomes a tug of war of willpower over what the market's really going to do. And you can be blinded by that. And if you go into trying to trade for a living too soon, undercapitalized, and I'm not talking about what you have in your trading account, you have to have it in cash reserves, something that you can pull from. It doesn't bother you to be able to pull from. And as you make more money trading, put it back. Restore that you borrowed from your 2 years, in this case now 3 years, reserve whatever you pull from to make ends meet when you don't make it in the market, put it back as you make it. And if you do that, and that's your model of constantly replenishing, keeping your well filled, you will have a far better chance of being consistently profitable. You won't have the stresses that everybody else places on themselves because they're not capitalized. They're undercapitalized. And you can have big account sizes. But if that's all you have, you're not fully equipped to do it because you end up pressuring yourself more than you need to be doing it.
All right, that's exactly, you know, I was thinking that 2 years, and then I also want to buy a house. I want to get a down payment for that too before I leave. So these are things that I want to save up for. So
can I ask you a question that's kind of personal?
Yeah.
What did you have in mind with the account size that you thought that would be ample enough for you to support yourself as a full-time trader?
You said 100K, but to be honest, I was just focused on prop firms for the longest time. So I was just thinking to myself that I needed 150K as a account size to get started. So 2 years of savings was, you know, 2 years of savings, a save up for that house that I want to buy, and then also another 150K for my own personal fund that I could use to get started.
And how old are you?
I'm 33.
Oh, you got plenty of time. You're a young guy. The desire to rush to that, I'm living in a house, I'm trading full time, and I don't have to have a job. That's a goal, but that's not a necessity. It's not a I have to have it right now. It's not a I have to have it quick either. So just understand that it's going to be a little bit more opposition because of all the things that we're having to deal with globally. It's affecting the financial markets. It's straining them. So be a little bit more forgiving with your time horizons. Don't force it.
Okay.
And I think that you'll be better served by doing so.
Yeah, I feel like, you know, I was trying to rush this whole time to get through all the content because I watched all the videos, took notes, and kind of skipped some of the steps. You know, people are talking about back testing a lot. I didn't back test enough, maybe. So I'm gonna go back and kind of reset the whole way and now put a time horizon on it like I did this time, which was like by this amount of time, if I don't do it, I have to go back to work. So since I'll be back in work and actually working, I think it'll be a lot easier to do. So I appreciate it, and it really feels good to hear from you directly. And thank you for all that you guys are doing for the community, along with you, Kitt. Thank you.
Good luck, brother.
Thank you.
Much love, Poppy. Keeping it going, keeping it flowing. My boy Austin just jumped in. Chartist just jumped in. Austin, bro, you there? Long time, bro. I haven't talked to you in a minute.
It's been a while. Kid, how you doing, man?
Bro, I'm doing great. How long's it been?
Oh, man. When you first started, like
Seriously,
the
when's the
trader,
last time you came up here?
when you first started, like the Trader Roundup group on Discord, so that's been a while, bro.
Yeah, no, yeah, actually, so that's been over 3 years, right?
Yeah,
So
something like that.
you were day oneer, yeah. Well, we just had our 3-year anniversary. We're starting year 4 right now. So we started in December 22 with the spaces. So we had 23, 24, 25, and now we're starting 26 now. Yeah, so 3 full years, and you've been there. So talk to us, brother. Give me an update. How's trading been since the last time that you were up here, which we'll say was 3 years ago?
Dude, the last 3 years has been a journey of, as an old saying, if you're going through hell, just keep going. Like, I had to really get to a point psychologically where I could do this consistently. You learn what to do fairly quickly if you're serious, right? And then after that, you have to get to a point where you have this rewiring in your brain to where your actions can match what you're supposed to do and stick to it. And so that was the hardest part. The prop firms was a big hindrance for that, to be honest with you. So, Michael, I want to thank you for the talk you gave this morning because somebody needed to say it. I realized that about a year ago that in a cash account, even if it's a small one, because it's not so restrained, you have the liberty to trade properly and build the right habits. And the gamification that you talk about, Kitt, with these prop firms, it just instills the wrong habits in you and make the journey much, much longer. But yeah, I spent, serious time studying ICT, all the concepts. When I say 12 to 16-hour days, especially in those earlier days, I sincerely mean it. My wife will verify it. Like I just stared at charts and studied the
So
content forever.
Austin,
Yep.
How old are you? Where are you from? And how long? And how do you engage with price?
I'm
Right.
yeah, I'm 38. I'm from Greenville, South Carolina, but by way of Charlotte, North Carolina. And so the way I came to the conclusion of trading now, I used to try to do everything in a 1 minute, and then I realized that I'm better on the 15. And so, Michael, you did a space maybe a year or two ago where you broke down how the daily candle prints from a time perspective. And that was the one that broke through for me, right? I was able to see it, understand it,
Do
and
you
I
remember
stuck with it.
do you remember what space that was, brother? I don't mean to put you on the spot. I know you're pulling from memory. I'm just curious for the community, for archival sake, if we can recall that, and you benefit from it. I'd like to throw it on Front Street.
I wish I knew. I don't remember because I've
You
listened
don't.
to
You don't have to.
all of them.
Will you do me? Will you do me a favor? Will you do me a favor and
Uh-huh.
just try and go back and look,
Yeah,
and then tag me if you don't mind? Just
I
whenever, no
I
stress.
will absolutely do that, but sometime tonight for
Thank
sure.
you, brother.
But I can tell you what it's about, and you probably have heard it. Many might have. Michael was explaining how when to anticipate the manipulation of the daily candle to be put in, whether that's London session, but more importantly in the indices, often it's the New York AM session, and combining that thought. And then he was saying once the manipulation is in, you can enter the trade. Stop goes obviously where it's supposed to on the other side of that manipulation, and you can hold that trade for the rest of the day. You come back at the 250 macro and decide do you continue to hold all the way through 350 or if you need to cut the trade. And that's going to depend on if the opposite end of the candle's in. So if it's a bullish day, and let's say, for example, the New York AM session runs down, runs London and Asia's lows, rejects it to turn bullish, and that's matching your drawing liquidity on higher time frames, there's a high probability that that's now the low of the day, right? And you can trust that holding. And let's say 250 macro runs into a new open gap and it's coming off. There's a high probability that that's probably the high of the day and you should cut that trade. So basically, I'm just looking for the range expansion of the daily candle. And that's the main thing I focus on and trade. And that actually has a lot to do with why I want to come up here and my question, right? So if it's all right, I'm going to go ahead and ask.
Yes, sir.
So with time alignment, if I remember in core content when it came to forex, I'm not sure if this percentage applies to indices or not. I would love to know. But there was a moment in core content where you talked about how there's a 70% chance that London would be the high or the low of the day. And then from a weekly profile perspective, I think that 70% also applies to Tuesday or Wednesday of the week being the high or the low of the week, right? And so taking those things and aligning that in time. My question is this: is there a process that you can follow that's simple where you can determine the expectation of the monthly high or low being put in, aligning that with the weekly high or low being put in, with the daily high or low? And if those things align, do you have some form of massive expansion? Is this just something that I'm imagining is possible, or is that truly a possibility for time to align like that and that to be some massive spooling event? It's a thesis, but I want to know if that's possible and if I'm on the right track.
It's part of the price continuum theory. It will be in print, but then allow me to put it in text form, and then I'll talk about it on the YouTube channel. So that way you guys don't have to buy the book, but just permit me the rights to be able to put it in context, in the right format, in text, in book form, and then I'll teach it. So that way you guys don't have to pay for the book, but you'll see it'll match. But all you're doing is you're describing working from a higher time frame down using the proper PD arrays. So what you are assuming is there is a valid thing. When the markets are predisposed to have very long price runs and they just continuously run, we're not seeing that right now. Just look at your daily chart, look at your weekly chart, and the monthly chart of NQ. It's just a block. So when the markets are providing the conditions to do those types of trades, yes, but it has to be a very loose market. It has to be low resistance. It can't be high resistance. It can't be held in a range. It can't be manipulated and held in consolidation in these very long protractions. So yes, you're on to something. Yes, you can trade it like that. You can take huge windfalls, but I don't trust holding overnight right now. It's just too many things that can pop off. And what might look like the higher low of the day in London gets taken out in New York now a lot. And that's simply because we're in this big, long consolidation. And that's usually a characteristic of consolidation markets. When you're in a trending model, London, when the market's bearish, whether it's Forex or any other market, when it's bearish for the week, when you expect it to be a week that expands and explores going lower, Tuesday, during the London session, between 2 o'clock and 4 o'clock in the morning, 70% of the time creates the high of the week. If it does not form and it goes slightly higher on Wednesday, that's your high of the week on Wednesday between 2 o'clock and 4 o'clock. That's how I taught it. That was what's in the core content, and it's applicable to index futures. It's commodity based too. It's everything. But it's not something you should try to force into it right now because we're not in a market condition that supports that. So if we're in range bound, you have to be comfortable trading inside the range, and don't demand that you're going to get the high of the day or the low of the day. Just trade inside the range.
That makes sense. So from a seasonality perspective, this time of the year, would it be considered accumulation and then we move into the season of manipulation and so on? Is that the right thought process as well from a bigger time frame perspective?
Think about a yearly candle. January, February, you're usually creating the accumulation phase, and then going into March, you'll see the manipulation. That's usually like the Judas if it hasn't already occurred. And we're still inside the range, so we haven't seen that yet this year. Then the real move happens. And spring usually is a bearish environment, takes us down to deep summer lows, the fall lows, and then we have that run that creates the bullish run. It's in the fall, going towards the end of the year. In bearish conditions, overall seasonality, and when you incorporate on a larger time frame analysis, like using monthly and weekly charts, if that's bearish, then the seasonal tendency during the springtime, when it's bearish, everything being bearish, you have these big dump offs. It's just beautiful cascading. It's just easy, really easy down close price runs. When markets are bullish, the drop down in the spring just sets up stronger longs in late summer. So it gets a jump before we get into the fall. And then the fall low creates this big, enormous rally that takes us through the end of the year, usually in the first week of February. That's usually how it works. So there's a timing aspect to what you're asking. Yes, it's there, but it's not always just linked to seasonal tendencies. You have to look at the larger, broader macro perspective of where we are bullish or bearish. Like we've been bullish, for decades in the stock index futures. So how would you use that? The fall months, look for something to be long on and carry it to February. And just look at how it's been delivering over the years. There's a few times where it hasn't been so wonderful, but there's by far and large, it's usually what happens. Markets that when they are bearish, you have to come out of index futures to do that because index futures are buying up only. Bearish markets, you'll see the opposite, where market structure, larger macro analysis sends price targets lower. So then when you look in the springtime, that seasonality of when the markets usually drop off and go lower, there'll be a whole lot more strength to the downside. And then many times they'll just retrace during the summertime and then continue into the fall, then makes the low of the year. And then we come off the low, but don't make any sizable run higher. So it's all part of using like Power 3 and how that blends together, using seasonal tendencies and larger macro analysis. But right now, take a step back and look at your weekly charts. Zoom out on a weekly chart and look at your chart about 10 feet away from where you're at in your office or wherever you're looking at, and see what you're looking at right now in the marketplace. Every market is being crushed with not having the freedom to move higher or lower. So don't try to demand get the high or the low of the day. Just try to get a nice piece of meat on the bone. And if you're bullish, try to get it towards the low end of the bone. If you're bearish, try to get it towards the high end of the bone. And don't try to milk every piece of it. Be glad you're able to get a steady diet of a pound of flesh whenever you take a trade and move to the sidelines. But we're going to have what you're looking for and asking about later in this year.
That makes sense. So aligning the time, like you just said, if we bring it down to a lower time frame, you taught that a macro is the last 10 minutes and the first 10 minutes of 2 hours, right? 50 to 10. So from a daily perspective, is that why there's multiple macros in the 3 p.m. hour? Is that hour the macro of the daytime window? Does that make sense, the question?
It's just there's a lot of things that are being shoved through because it's the end of business. It's the close of business. So
Okay, so
it's just a matter of the primary function of booking, closing the day out, and all the backroom accountants, all accounting that goes on with closing the day out. It's just built in all these little functions that are algorithmic. They shove orders through, they push orders through. Businesses that do, like for instance, like currency trading, they may wait till the end of the day to push in orders because they're waiting for a differential to have a greater effect. And that will cause them to push orders through. They have the economic counter, the earnings after hours, all those things. So there's so many factors in the 3 o'clock to 4 o'clock that make, if you don't know what it is or even aware of it, you can get burned pretty quickly. That last 10 minutes of the day can burn you if you're holding onto a trade and you got profit and it starts to move against you. Usually that's a bad sign because it'll just scream against you. So I wouldn't look at it as it's a macro of the macro of the day. It's just simply 1 hour a day where there's a lot of things going on and you can make an entire career off of just that 1 hour.
okay, last question concerning the macro. What are the key signs of what you should expect for the upcoming macro? Can you tell when it's going to spool or when it's just going to put the manipulation in for the next hour for a continuation play?
Well, that's assuming you know what you're looking for in terms of a trade setup and how that falls in line with what you think for the day, where you're at in the week. So if you're bearish and you think that we have some more exploration to the downside, you can use the macros to time an entry. But let's say the market refuses to go up into your PD array at the macro time. Then you're going to do nothing. You simply do anything. You don't do anything at all. So they're just key times to, if you're waiting for a trade setup to form, you have to submit to that time. If you're already in a trade, you're anticipating that to act as a draw time-wise to fulfill, if you're bullish, waiting for it to reach up into a premium array to facilitate an offset distribution to either a partial or a full closure on your trade. So it's kind of like, I mean, I could talk for 4 hours and really not even scratch the surface of the question you're asking because it revolves around understanding a whole lot more things to just simply saying, here's everything you need to know about a macro in 5 minutes, because there's a lot of things you can do. You can use it to time a trade. You can use it to time a close of a trade. You can use it to pyramid and more entries into it. You can get a lot of insight by seeing nothing happen during the macro. If nothing happens during the macro, then you know the next macro is going to be a deliver. So I mean, that's the best I can give you for right now, because we don't have a condition to look at over a chart so I can say this is what's useful here, and you wouldn't be so much demanding on this aspect of the macro because this is taking precedence. So it's a whole lot of things that's required for you to get a more satisfying response. But I think you're demanding too much out of a very complex subject matter, because it's not simply it's time to take a trade or it's time to take an exit. There's a lot of other things there. Just like I talk about how if a PD array doesn't perform as it should, is that failure? No, it's actually giving you insight. If it can't trade up to the premium array and it just starts wilting and going down, what is that indicating? It's a weak
It's very
market.
weak.
Yeah. So the same thing applies to a macro. If you're expecting the macro to deliver some kind of volatility and it just goes flat, what are they showing you? They're showing you that you're under time distortion. So they stepped in. There's that glitch. There's that black cat where Neo sees the cat twice. Something's not right. So that's what it's telling you. Okay, take a step back, wait for more information. And if that means wait to the next macro time, then simply wait to the next macro time. But what happens if it starts running after the macro time? Use PD arrays to get in sync with the move. If it's likely to keep drawing to that liquidity you were looking for, don't just say, well, it wasn't in the macro time, so therefore I can't take a trade. What information transpired during the macro time or just after it? As I mentioned the last time we had this forum and we were talking, I forgot who mentioned it. I kind of like to use the same segue into it here, where in recent months and weeks, I have been taking trades that have formed after the macro time because they're manipulating everything. So I'm looking for something to take place in price action at the macro time. But if I don't get on board or if I don't trust it and it starts delivering as everything would normally, Okay, then I'll get on board with it and I'll participate in it. But I'm expecting to not have the same precision or the degree of payout or length of time running in the trade because I'm just trying to get a pound of flesh and running out. So it's a lot of things that we can talk about when it comes to the macro, but having a whole entire clinic on it simply because, what's the things I'm looking for, it's germane to whether or not I'm in a trade, if I'm looking to get out of trade, looking for a new trade, if I'm looking to pyramid in it, or if I'm looking for intel about what the morning's going to be like at 9:30. So if 8:50, 9:10 macro is a dud and it's not doing anything, that's really a precursor for the 9:30 opening bell being violent. So it's going to run aggressive, and it'll do so for the first 25 minutes until we enter that macro time, which would be 9:50, 10:10. And then that one should really be like gasoline on a fire and just propel it even further. So it's a lot of things, but it's all based on if this, then that. And without having all the if then clause and all the things that would be useful for that equation, I'm limited in terms of responding to you where it may not be as satisfying as you would hope to be like a 1, 2, 3 easy type thing. It's 1, 2, 3 easy for the conditions when certain conditions are there. This is what I'm looking for. I'm looking for X, Y, Z, and it better do this, it better not do that. And if it does these things, then I'm going to take a trade or do whatever I'm doing. But it's a time when we're looking for information to really deliver the volatility. Does it come in? Is the PD arrays that's forming or it trades up into during that time, is it reacting as you would expect? What happens if it doesn't give you a bearish run and you're expected to see prices go lower and it trades up into that macro time and it trades right up in that perfect presented fair value gap and it was doing everything you expected it to? So now you want to go short, but then it rockets right through it and goes up higher. What is that indicating? You're off side. So switch. It's not delivering as you would expect. If it's algorithmically going to drive lower, everything is in play as it should be, and it rips through that, then you have to make the alignment and say, I read that wrong. I'm going to change bias and look for something to go long. So what does that mean? Look for an inversion fair value gap now. Look for a bullish breaker. Look for something that is a transition from what it was as bearish now becomes bullish. So your inversion aspect to the PD arrays, that's when it kicks in. And it's all, salient to what the macro time does or doesn't do.
That makes perfect sense. And it's a great answer. Hey, I just want to thank you, Michael, for all you sharing. I know a lot of people tell you that, but it genuinely is unbelievable information. And what you provided for us, it's just, I can't thank you enough. It's fantastic. And if anybody hasn't truly put the work in and learned from him, you're doing yourself a disservice because there's so many people that's claiming his concepts and they're seeing things just from a pattern perspective. But when you actually go do the work and look at what he's taught, you'll start seeing the algorithmic things in the market. And so, yeah, I just want to thank you. I really appreciate it. And yeah, I'll step back. Thanks, man.
So piggybacking on our boy Austin, I just want the audience to understand something. If you are new to trading, and if you're here or talking about trading within 3 years, I'd be shocked. And I say that why? Because there's so many new people that come in and that fail quick, that do things wrong fast, and that fade and burn, that die, that don't become part of the industry ever. And a lot of folks want that consistency. A lot of folks want that longevity. And my boy Austin here, real time, has been around for 3 years. Again, I'll challenge most listeners here. Lots of folks don't have 3 years in the market. And I'm just saying, with kid gloves here, what Michael's been saying is you need to be patient with yourself and you need to just get through the experience. So anyway, Austin, thank you for being here, bro. And anyone who's listening, longevity, and what Austin is saying is go listen and watch ICT and slow down and focus. And Austin, why don't you close with your statement here as with us as how does a trader get longevity? With me reiterating how short-lived a lot of folks are with trading. How do you stay in the game, Austin?
I mean, you just kind of got to be a psychopath, to be honest with you. I
Hey, winner, chicken dinner, boys and girls.
I just have a love and a passion for it, man. And I'm the type of person that if I don't have a passion for it, it's hard for me to stay committed and focused. But when I have something, you won't find somebody to outwork me. And so if you don't have a true passion for it, there's so many other things that you could go do that won't be nearly as hard as this that you'll succeed at faster. But nobody wants to hear that because trading has this addictive nature to it. And so what ends up happening is you have a lot of people that just become gamblers and they think they're traders, right? But you know you're truly on the right path when you slow down and stop trying to do it so freaking fast, man. And that's what's holding you back. And it's a painful experience to realize that when you finally decide to slow down, that becomes the beginning of the real journey for you. You know what I mean? And so just stick with it. Don't quit. Keep going. You're going to go through it. Don't beat yourself up. Michael said something in a space one time that really rung in my ear. It planted a seed, but I didn't get it too much later. And that's don't be so hard on yourself because you'll do things you know you shouldn't do, and it's easy to beat yourself up. And I think that's why a lot of people quit and give up because they're just so hard on themselves. So I think a part of the longevity, to answer your question, is to try to enjoy the journey, slow down, and find joy in the process. And if you can't, then maybe it's not for you.
What a great answer, my boy Austin. Now, I can tell you, Jaquan, if you wouldn't mind coming up and following up on Austin, and I bring Jaquan up specifically because he's just like Austin. He's been engaged in the community. He's been around for a minute, but guess what? We ain't heard from him for a second. Jaquan, where you been, my friend?
Yo, what's up, man? Can you hear me?
I can, dude. How
Hey.
long has it been?
Oh man. So I mean, I've been following. I've been in the community for a while.
No, you have. You're close to a day oneer, but you haven't been as active as you are right now. So, or you haven't touched base at least within the community or with me of late. So, if you wouldn't
Yeah.
mind, again, reintroducing yourself, talking a little bit about
So
your journey. I know you've been here for a minute. So,
yeah. So I've been trading for about, I would say, 5 years now. On and off between like prop counts and live accounts. Mainly, like I started with prop counts, prop firms or whatever like that. It's funny. So I started out retail, like the retail simple trend lines and everything like that. And I remember one of my friends, he had traded or he started using ICT concepts. And for the longest time, I just like I was studying everything, like the trend lines, the double tops, double bottoms, and all that stuff like that. And he was like, he was like, yeah, that's cool, because he put me on to one mentorship, and that's the one I was kind of going with, and that's what I thought was gold. And I remember when he finally put me on the ICT, I started watching his videos, and one of his videos, he was like, man, double tops and double bottoms and head and shoulders. He was like, that's all bullcrap. And at the time, I was faithfully like following that. So when he said that, I was like, you know what? I turned it off, and I was like, nah, I can't do that. I was like, I don't understand how, that's not how it's all bullcrap. And I say like a couple months later, I just found myself like hitting a wall, kind of like with trend lines. I'll look at my charts and I'll just see like a random trend line. I didn't really know like exactly where to go from there. So I decided to go back to ICT, and I follow like the whole 2022 mentorship and everything like that. And I've basically been with him ever since. Right now, I'll say in my journey, I kind of took a step back from like trading and then focusing on myself. So I actually just read this book called, I think it's The Hour of the Dog and the Wolf. I don't know if you ever heard of it. It's a great book. It actually talks about like the biology of like trading. It's a neuroscience. It was I guess a day trader who then became a neuroscientist or neurologist. He just talks about like the biology of the body when it comes to trading. So it's like there's things that naturally just, when you're looking at numbers fluctuate, you're looking at fluctuations, like your body is just naturally producing these like hormones and everything like that, which kind of like messes up your logical thinking and all that stuff like that. So right now I'm just kind of focusing on that, like focusing on my breathing and everything like that. So that's kind of where I am right now. If I my
So the book talks about the vagus nerve,
yeah, yep, the Vegas nerve.
and it talks about fight or flight.
Yes, it talks about all that. It talks, and at the end, it said that like we as traders, we need to like the same way how they have sports science where they hook up all the things to try to maximize the best potential as a sports athlete. Like you should be able to take that and apply it to trading too, like and try to find different ways. So obviously like meditation and different things like that, like meditation, taking cold showers at the end, because like you kind of shock your body. And if you practice the breathing, you're kind of like simulating the fast heartbeat. Same thing like when you're going in on the charts and everything like that. So that's kind of like what I'm practicing now. The way I trade, I basically use recently, like when he just recently released the Fibonacci and grading the wicks, the daily wicks and everything, and then using that on the smaller time frames. I also use new week opening gaps and using the wicks if I get a wick through or a quadrant through the fair value gap. After we take liquidity, I know like which fair value gap is high probability. And for the longest time, I would take. I don't know, like I don't have like I've been struggling with like my take profits. I feel like I don't have a problem getting in a trade, but lately I've been having issues with like my take profits, because there's been times where obviously like I'll go in and I'll say, all right, let me just get a 1 to 2, and I can get that very easy, but then it goes 100 points past my my TP, and that's I know like that's you have to be okay with enough, but sometimes it hurts still to watch it go so much further.
Use
So
double
yeah,
tap.
I mean, would you?
Mm-hmm.
Use double tap.
No, go.
Go in with 2 contracts.
Mm-hmm.
Use your low hanging fruit objective. Exit. Whatever your stop was at the last time it was being managed before taking your target.
Right.
Leave it there and walk away. Don't even look at the chart. Just let it go. Let it go and add another 50, 75 handles, whatever you think the best case scenario would be.
Right.
Use about 80% of that range and don't try to get that. Just try to get a little bit more. Just let it go. Either it stops you out, you made more money, or it gives you much more than your first portion of the trade did. It'll satisfy the urge of I need to get more.
Okay.
It won't be something that's demanding, because you're not going to be watching the chart. You're not going to regret it because you placed a stop where it can't turn into a loss, theoretically, unless there's something ridiculous and it gaps against us. But generally, double tap is simply going in with 2 positions, two contracts, or 2 lots if you're trading Forex. Know what you want to take as a minimum. As I gave last week, 37.5 handles is a minimum for me. Now, it might be 40 handles for you. It might be 20 handles for you. Don't let me influence whatever that is. Whatever you can hit as your easy 1-to-1, that is easy stuff. But now you want to branch out to what is 1-to-2. What's 1-to-2? That's your bread and butter. That's what you're aiming for. Hit that. Put your limit on. Once it fills, your stop loss that's been managed to something better than break even. It's got to cover costs and give you something. Pizza dinner, something, a tank of gas, whatever it is. If you get stopped out on the remaining balance of that final contract portion, you're okay with it. You won't be regretting that you didn't find an exit, at a better advantage. But having that condition of, okay, I have something in the race. I have a hook in the water. And if it's a runner, I always am ready if it shows up. But if it doesn't run, I'm okay with that. And that's double tap. Double tap is having something in the water, some kind of insurance policy that if it does run, you get a little bit more. But if it doesn't happen, you're okay with it. And that was how I compensated for that same thing. And I honestly, even still 34 years, I'm not really satisfied with my exits. I want to improve them better. And you're always going to have that. So whatever it is, usually it's entries for people, and they're okay with where they got out because they made money. But you're like me in this regard, where you can get in, it's not a problem, but we're not ever going to be satisfied. And I'm convinced that at an old age now, I know I'm never going to be satisfied. I don't care what I'm doing, how much I'm going to improve on it. Everybody around the world could say, man, it's perfect. I don't see it as perfect. I want to make it even better. So just be content with the idea that it's a work in progress for you, but don't hold yourself to its failure or worse because you're not able to get everything the market's going to give you, because it's always going to run beyond what you thought it was.
Right. Okay. I appreciate that, man. And then so my last question, right? This is kind of something that I've just been wondering. So ever since I've been grading my fair value gaps, or just like the quadrants and everything like that. I know also you mentioned like eighths and sixteenths, and I was just kind of curious. I know you didn't really go too deep into it, but I didn't know if they have the same significance as quadrants and everything like that. So if I get, say, if I start grading them and I get a quadrant or eighth line through a fair value gap, does that make that high probability then? Like, or like, what should am I just looking for the sensitivity to that level?
Yep, that's exactly all it is. That's all it is. I'm looking for, because think about it, if the market, you have the lines on your chart, okay, or in my case, I have them on a notepad, and it's right here next to me. The idea of knowing what those levels are, if you're bullish and you can split the PD array or the imbalance that you're measuring real order flow against, when price is dropping down and while it's bullish, you want to see it trade down to one of these levels and then repel, not show any willingness to put a body below it. What specifically am I talking about? The consequent encroachment or midpoint of it. If it's bullish, it needs to keep the bodies in upper half. But knowing how far and to what degree by specific price, by using the gradient levels, when it starts to fail to touch them and they keep making higher wicks and higher candlestick lows inside that PD array, even in the smaller 5-second, 15-second chart, you're watching real accumulation take place. I could give two shits how many people's buying at specific price levels because I'm watching real accumulation there. And I'm seeing those levels not get touched. And so if it's bullish and it can't even touch these levels and they start showing that it can't reach to the lower one again, it can't reach to a lower one, and it starts doing that, what is it doing? It's showing you it's professional accumulation. It's a professional accumulation coming in. They're not letting it go lower. It's like a billboard sign saying, we're about to leave the station. If you're not on board, you're going to miss it. And then you'll see it. Go back and look at old data. You'll see it's there all the time. You'll be able to measure real accumulation and distribution by using these levels that are, it's not that you're trying to get in there and use them for entries just for the sake of using entries. It's for measuring real-time price delivery. You can use them for entries, and I do them for partials, or I use it for building up a pyramided position. Like when you see me doing lots of entries around a certain level, I'm using those things. Now when you can go back and look at where I was trading in, and you're like, why is he entering there? Well, now that you know that the levels are, you can add to your fib, you'll see what I'm doing. And when they start to go up, when I'm bearish, and they stop hitting the premium side, and they fail to touch the lines that would be acting as a resistance, quote unquote, if they can't even touch them, what is that indicating? Weakness. And that means I know we're about to see expansion. Where is it going to expand to? To the downside. And that's how I'm able to tell you in the charts when I would type out, I'm expecting speed and expansion here. I want to see speed and magnitude. I want to see it run because it's showing me that sensitivity in an area where I'm studying, but I've not shown it in the charts back in those times when I was doing those. I haven't taught it yet. But now you have that information now, so now it makes much more sense. Oh yeah, now it makes sense why he's entering there. Why is he entering there? Because it's these levels that are failing to be touched. When it's bearish, it can't even touch them. I'm going to take the next candle, rate it open, and boom, I'm in there. I don't care about it being directly moving higher because I know it's already giving me the indication because it can't even touch a level that should be sensitive. And if it's bullish, when I'm expecting to be bearish, I'll see it right away because those lines will start getting pierced early. And then I can say, okay, something's wrong here. Let me cut half the trade off and wait for more information. Or just say, I'm done. I'll save the stop and I'll take myself out of the trade where it is right now. So it gives me a process, a protocol to follow, and I'm not guessing. I'm reading real-time price delivery and measuring real institutional accumulation or distribution in key levels.
See. All right, man. Thank you. That was amazing. I appreciate that.
My pleasure.
Jaquan.
Yes, sir.
Good questions, Jaquan. S Pills here. My professional Fibonacci user, even though technically that might not be the case. He is Italian, so we like to use the word Fibonacci.
Yo,
S-Pill.
Kitt. Oh, can you hear me?
I can, brother. How you
Yo,
doing?
Kitt. Yo, ICT. What's up?
What's up, everybody? If you have a speaker tag, say what's up.
Hey, yo, what's up,
What's
Flaman?
up?
Yo,
Everybody, do it, do it, do it.
What's
What's
up?
You know,
up?
it's funny. I literally,
Most of you are too young for that commercial, but
I'm
it's
that
telling
was
you,
hilarious.
last
great.
weekend I saw that. I pulled that video out to show my sons. I said there used to be a beer commercial all the time where it has the, you know, the where the scary movie got that from. They did that little clip about it, and I was like,
Yes.
Dad, why did they do that? I was like, let me show you where it came from. And they're looking at it like, that was on TV. I said, yeah, it was popular. It made everybody want to drink that beer.
That's our generation, right, Michael? I mean, we know you reference.
Yeah.
It's so funny you reference that to the Huddleston boys, and we here at Trader Roundup, we were talking about it today.
Yeah.
What's up? S-Pill, good work, buddy.
Thanks, man. That was good. Thank you for like understanding what I was doing and keeping it going. Yeah, no, just real quick. So I'm about to make seafood linguine. So I just wanted to hop on real quick before I get that going, intense, and then my family's coming.
Dude, can you go over a little bit?
They're
Yeah,
coming
here's
home
the
from
thing,
our.
Michael. You got to understand. S-Pill is the culinary extraordinaire. He's Italian. He's got a stable of children. You can typically hear them running around. He has to escape
I
to
mean,
the garage.
so well, if you're gonna, I mean, obviously, if you're gonna just start with like your browning some garlic in oil, in olive oil, then maybe you want to throw like some capers and olives and cherry tomatoes in there. So you want to like brown the garlic first and then let that cool off a little bit and then put all that other stuff in so it doesn't splash all over your kitchen and get crazy. But when you put those items in there and you get them hot, they're gonna get splashy, right? Because the oil and and liquids don't mix. And that's
The tomatoes pop too,
yeah,
right?
so that's why you got to drop some white wine in that motherfucker and get it like
Oh,
sauteed up a little bit. And
yeah. It's for flavor,
you have a
boys. It's for
lid.
flavor.
You have a lid. You put a lid on there, and it doesn't have to be covered. Kind of like the technique is to put the wooden spoon like on the pan and have the lid on it, so like vapor can escape. But dude, I messed up because
You're such an old school Italian
I
chef.
messed up
And
because
I know it's from the
I don't have
motherland.
any
You've
white
been taught
wine, bro. I don't
appropriately.
have any white wine. All I have is some Pinot Noir. So what I'm gonna do is just put a little Pinot Noir in, mix it with some water, and have a little splash of like apple cider vinegar in there. It'll be fine. So you can do that in a pinch when you don't have wine, like for whatever. Anyway, let me get down to the point. I'll be quick and I'll be gone. I wanted to talk about today quickly because it was kind of it was a fun day. I really didn't trade all week. I traded early in the week, and I had a terrible session where I just like didn't respect my risk, and I went a little overboard, and so I basically didn't trade all week. And then today I was just like, man, this looks kind of interesting, and I put on some longs this morning before that crazy news, whatever the tariff thing or whatever happened. And like, next thing you know, I looked, and I'm just like massively up. I was just like, what is? I was like, okay, like here you go. But let's get down to business and talk about the levels I want to talk about on ES. Now, I'm saying this because like all I do is I trade ES mostly. I don't have these levels on NQ, but I would ask you guys, whoever's interested, to go back and find them, because it would be interesting if someone posted them to be able to see right how they reacted. So I'm talking about the yearly open levels on ES, and I have RTH and ETH, and I'm using the 1 minute close. So I'm using the 1 minute close of January 2nd for both Globex and RTH session, and I have but hold on a second, wait a minute.
Oh, there's the kiddos. Yearly open. I like where did S-Pill go? Did he fell off? Well, not on purpose. My boy Pax is in the house. See if we can't get Pax up here. Just saw him jump in. S-Pill, where'd you go? You're in the middle of telling a story. S-Pill, here's the thing. He's busy being a dad. I already know the deal with S-Pill, okay? So he's just managing, again, a stable full of kids. He's got some dinner to prepare, and whatever reason he jumped off. We'll see if he jumps back on. We'll transition back in. Keeping her going, keeping her flowing. We got Ledesi in the room. We got Chartist had his hand up. We heard from Jaquan. We heard from Austin. We got Alex Perp here and Suri. We'll see if I can't get S-Pill back up here. I don't see him here.
Yo, what's going on, Kitt?
But
Desi, I just want to say what's good. It's been a while since we last chatted. We got ICT up here. How we doing?
yeah, bro.
Yeah, dude, this market-wise, man, this chop is making me pull out my own hair here. It's frustrating.
Yeah, it sure is. Where were we in the order of things?
Chartist should be next, I believe.
Yeah, I thought I wasn't sure. Go ahead, Chartist. You're up, bro.
Yeah, do you hear me?
I do.
Good evening, everyone. I have a question to Michael. We know that every price swing is predetermined and price is delivered to specific targets at specific times. So within that framework, my question is regarding volume imbalances and time efficiency. First, is the volume imbalance an intentional algorithmic phenomenon created by the algorithm itself at specific times to signal something to smart money? Or is it an external occurrence that the algorithm simply recognizes?
I mean, by definition, it's an imbalance, right?
Can
by
you
definition,
repeat,
it's an
Can
imbalance.
you repeat the first part of what you said? I couldn't make out what you said. I'm sorry.
Oh, I asked if the volume imbalance is an intentional, I mean, is it algorithmic? Is it an algorithmic phenomenon created by the algorithm to signal something to smart money? Or is it an external occurrence that the algorithm simply recognizes and recalibrates accordingly?
Okay, the volume imbalances are essentially what has transferred from when markets when they weren't electronic, when it was simply open outcry, that's all there was. Okay, this phenomenon wasn't as obvious as it is now because we're in electronic trading. So there's a separation between candlesticks. So the open and close of the bodies, when they present themselves like that, but the wicks may touch each other, but the bodies don't. That volume imbalance is a very, very simple process of viewing it as a common gap, just a simple common gap, and it'll be revisited. It could be revisited for a market returning back from a higher level down to trade into it as a point of reference, or it could be below the price and trade up to it. And it's the most flexible of the PD arrays. So it can be used multiple times until the time frame that it forms on. Once a body is laid down over top of it, I personally am no longer interested in it. So the question of, is it created by the algorithm? Well, since I believe markets are controlled by an algorithm, it goes without saying everything is controlled by the algorithm until the market does something like geopolitically, where the market comes, like today, Supreme Court came out, said what he said about the tariffs. Nobody can predict that. No, it's not algorithmic. That's just all of a sudden, boom, market starts going off.
So it's not something, it's not a signal, like a signal to smart money to signal something to them, right?
It tells them how they can participate in a future run when it goes back to it.
Okay.
It's used as a means of engaging an entry, and it's also useful for managing stop losses.
Okay, so that process you said it's called patchwork, right?
Yeah, when price goes back to inefficiencies, it's patchwork.
All right, so if the algorithm does return to do a patchwork on these volume imbalances, and of course that patchwork would consume a part of the delivery time window, does the algorithm then accelerate price toward its locked on targets to compensate for that time it's used to do the patchwork? Or is the entire sequence already calibrated within the original time model and delivery schedule?
Can you hear me? I did not make out what you were saying. Could you repeat it one more time? I'm sorry.
All right, I said if the algorithm, when these volume imbalances occur, okay, when the algorithm returns back to do the patchwork on these volume imbalances, that patchwork is gonna consume a part of the delivery time window. When that happens, does the algorithm then accelerate price toward its locked-on objective to compensate for the time it used to return back to that volume imbalance, or is that return itself is already predetermined, like pre-calculated?
Assume for a moment we're looking at a 1 minute chart and say it's NASDAQ and say that that volume imbalance is at 25,010 even. And prices at 25,100. So the market's likely to pull back. Okay, it could come down into that volume imbalance. What I would expect is I want to see price trade to it. And if I'm bearish, I'm going to take something as an exit as it gets into it. If it lays a body down on top of that volume imbalance, that means there's no more separation because it's been bridged. That patchwork has been done by the electronic delivery of price where it just keeps offering lower prices. It doesn't matter how many people's buying and selling, it's going to be delivered down there because it's autonomous now. Old heads ain't going to like that. They're going to try to wrestle with it, but I can sit here and do it all day long on a chart and tell you what it's going to do, what it's not going to do. I've done it behind a paywall, and I'm explaining to you, and I have students all around the world that do it now too. You expecting this delivery in that tiny little segment of price action, once it gets there, yes, we're expecting some measure of either completion of a price run or the beginning of another smaller little retracement if it's going to continue further, if this is part of a larger price run. It's just an opportunity for the participants to position themselves in an existing run that's not yet completed or to enter in one that's about to begin. So yes, I am teaching and I'm showcasing when these things are traded to, they instigate, they start something or end something.
Okay, thank you. I appreciate the insight. Thank you so much.
You're very welcome. Thank you for your question.
The way Michael has explained the liquidity paradigm and the efficiency paradigm, or the market efficiency paradigm, we're constantly, price is constantly ranging from liquidity to inefficiency, and the volume balance is another form of inefficiency, as is the fair value gap. It's a little more obvious, and it's almost like a hiccup, right? It's usually, typically, it's something thin in the market. Anyway, it's an inefficiency. I don't know, Michael. I just wanted to throw that in
Think of it like
quickly.
a crease in your pants or a shirt. It just got to get ironed out, and that's only going to be done by redelivery.
And like the SLP has a mandate to deliver price, and these inefficiencies typically get repriced too, right? So, I mean, I don't know, that's my understanding of it. And the way we look at equal highs and the way you look at a fair value gap, it could be an NWOG and NDOG, any type of gap or inefficiency. We as traders are looking for inefficiencies and liquidity, and we're basing our trade ideas and trade plans around those. As I mean, it's great when Michael asked a trader last week, do you enter at extremes or within an inefficiency? Because that says a lot about you and your trade model, just by simply answering, are you entering at highs and lows, or are you entering or are you entering at inefficiencies? And the volume balance is one more inefficiency. And depending on where you're at fractally, it's going to be what we utilize all inefficiencies for and liquidity. And that's a form of draw or a trade idea. So you're trading to it or from it. That's just trying to simplify things, chartist. In my thoughts or 2 cents. Obviously, Michael's here. I just wanted to add my thoughts. So, Alex Perp was here. I haven't heard. Where did Lisan go? Lazon go? Where did he go? Where'd he go? It's gone. Okay. We got Candlestick Stalker here, Suri here, Alex Perp. Alex Perp, great question, chartist. Neil's here. Alex, it's 7:09. Michael, how are you on time, sir?
7:30. I gotta walk.
All right, sounds good. 20 minutes,
Can I
boys
add
and girls.
something?
Yes, sir.
Still the same question. I mean, to expand on that with an example. If the algorithm is scheduled to deliver price from point A to point B within a specific 60-minute window, but it spends 20 minutes of that window returning to the volume imbalance to do a patchwork, to rebalance, does the algorithm then step on the gas and accelerates the remaining move to point B to stay on schedule?
Yes.
That sounds like AMD. So, yeah, I love how Michael gave a single word answer. Yes.
Okay. Thank you. Thank you.
Hey, can I hop in here with a quick question?
Jump in here, Dom, bro. I was trying to get you
No, I
up
hear you,
here.
man. I'm trying to eat a ribeye, and I'm talking to my girlfriend and hanging out.
My
So,
G.
but multitasking a little bit. Quick, easy question, probably for Michael. This has been like something that's been something I've tried to figure out in my mind, listening to things I've learned from you. And we talked about it for many hours on different discords amongst other traders. And it was I think you even talked about it some earlier today, but the buying and selling pressure not being what moves price. And it makes perfect sense to me for all the reasons that you mentioned. Like, we wouldn't want to let our enemies across the world be able to impact our markets that way. But you talk about displacement and use the analogy of the elephant putting its foot in the water, and that action or reaction kind of sounds like buying or selling pressure, like what would cause it to displace without it being a big buy or big sell. I was just wondering if you could help me make sense of that.
It was an analogy to help illustrate something that if you're not used to seeing it, if you're not looking for it, if you think it's just sellers coming in pushing the market down, or if it's buyers bringing the market up, okay. When smart money is part of the price run, and they are facilitating that price run, and the algorithm starts spooling price away from current price action, that's what that big elephant stepping inside of a children's swimming pool is. That displacement, that's what I'm indicating. They are not making the market go down. The price engine is dropping aggressively. It's offering lower prices quickly, sharply, quickly. The only thing I could use back then to give that analogy to understand, to help others understand it, was to use that. And you're the first person that ever really said that to me, and I'm glad you did, because it gives me an opportunity to now also include it, because I didn't have that in my book. Like, I can now add that, because if you've asked it, maybe there's other people that haven't been in the position like you are, and we can ask me. So just for clarity, since everything is, and this is my personal belief, there's a lot of people out there that do not believe an algorithm controls price. They accept the fact that there's algorithms, and they understand, and it's common knowledge, but they argue it's auction theory. Okay, let's use that analogy for a moment. The market's going to offer higher prices until nobody is interested in buying anymore. That's the general premise. They keep going higher, keep going higher. But why is it that there's a block of 150, 250, one tick above, and the price just says, I'm not going there? If liquidity is the lifeblood, why is it that happens? and the market stops right then and there and starts going the other direction. Surely there's somebody that would be willing to step in there with a market order, and then one of those 150 to 500 orders, there's simply one tick above, it doesn't get consumed, it doesn't get absorbed, it doesn't print that other tick. That was the first observation I had, because I just knew that there's something else going on. It's something else that's much more in control. The auction theory is better understood by simply saying the markets are autonomously driven now. It's far more efficient. It's very efficient. It's orderly, and it's advantageous. The people that resist it, they're the ones that are struggling. They're going in there in the beginning, the first couple minutes of trading at 9:30 opening bell, and they're just throwing orders in there and then seeing what happens. That to me is a neophyte. They don't know what the electronic markets are doing anymore. They're just trying to get a feel for what's going on. And they take lots of useless trades to get information, wasting time, wasting money. Instead of waiting for the market to show displacement, that displacement where it leaves a specific key level, for instance, if we see markets run above an old high, there's a buy side liquidity pool that's being attacked right now. Does it reject that and go lower and create a SIBI? If it does, and it takes out a short-term low, that's displacement. That is the elephant stepping into a children's swimming pool. That water is going to be displaced and it's going to spill over the edges. That was the analogy I was going for. So it wasn't that more sellers came in and overtook the buyers, because everything is still a net sum zero game. It doesn't matter how many people's buying. To get that print, to get that trade, you have to have the equal side on the other side of it. There has to be that many buyers on the other side of it if you're selling it, vice versa. So the argument of, it's buying and selling pressure is basically bullshit, because why does the market stop one tick away and it doesn't consume those orders? Why shouldn't it go there? I mean, I've been in positions where I'm trying to push 50 to 100 contracts. Bang. Why ain't it going there? It denied my limit order. Why isn't it going there? Because it's not buying and selling pressure. It's fucking controlled. It's literally controlled. So when you have this happen in your own hands dozens and dozens of times, and you think for certain it's going to go there, it's going to go. It's literally talking about half of a handle, 2 ticks, 1 tick, and it won't go there. It won't fill that. And there's orders sitting right there on there. You can see on level 2. It's right there. Why won't it go there? Because it's not based on that. It's algorithmically delivered. It's limited. And when the market shifts and it shows these displacements, that displacement is the analogy I was anchoring to, where it's the analogy of a large elephant stepping into a children's swimming pool, and that displacement is swelling over, showing you, okay, things have shifted. Something has underlyingly shifted behind price action, and whatever has happened is no longer doing it. So then now you can get on board with looking for anything. In this case, if it was a SIBI after buy side's been taken, that's first into the fair value gap. So wait for it to trade up into that. You can fade that initial short little run and then be a participant with the move that proverbial elephant in the children's swimming pool illustrated by displacement moving lower, not selling pressure. It's just that displacement that took place.
I appreciate the explanation, but that makes perfect sense.
I appreciate your question, actually.
That's the same as institutional sponsorship. Then the displacement just means they're in the move. The move's not there because of their buying or selling, but it's a signal that they're in the move, that we want to be a part
It's a billboard sign for them to get on board. Look at the volume. If you guys want to study volume, look how many contracts get in at the high and during that displacement, and then watch what happens after that. Then you start seeing the dog piling in, because they're waiting for that quote unquote indication that it's time for them to do so. And they wait for that fair value get to trade into, and then they start opening the floodgates, and then everything starts just rolling over and going lower.
Gotcha. Thanks.
What a great question, Dom. I mean, anytime we can reference 2022 in episode 12, I get warm and fuzzy. I'm just saying. I do. I mean, I've watched it enough times. I really, really, really love that episode. It's probably one of my favorite episodes, and understanding the liquidity paradigm, obviously the short and intermediate term lows, and just that analogy of the elephant in the swimming pool. Really, really awesome. So,
Okay.
VR We are in the final stretch here, boys and girls. The final minutes. If you've got questions for Mr. Michael Huddleston, it would be advantageous for you to put those in the comments. I will also ask or implore nicely, pretty please, share this on your feed. Let folks know, hey, we got a little good info here going on. So I would appreciate that. Alex, you're up next. Rob, and I want to bring up Neil probably to close us down. But yeah, that's what we got.
Yeah, what's up, everybody? Just love everything that everyone was saying and all the alpha that Michael's been telling us. This whole space has been like a core concept fucking video, like just so much.
It's interactive mentorship, and it's the most like fulfilling thing. I think all of us love it. Like we get to ask questions to Michael, like how, I mean, dude, I fantasized about this. I literally had dreams about it. Like, wouldn't it be
Oh,
cool? I'm
who's a
not
better
kidding.
mentor? I mean, what other mentor is coming in spaces and hanging out with the boys and answering questions?
I'm chilling, bro. I'm telling you this, Michael. We need to get the Huddleston boys here on Trader
Oh, that'd
Roundup.
be
I
so
mean, you
fucking
had.
dope, bro.
I'm telling you. Well, I could hear when he was talking to his boy earlier. You know, I mean, if we could get the Huddleston boys, I just like referring to them as the Huddleston boys personally. That's like my affectionate kind of term
Hey,
for
the
them.
triple C's,
Out the rip.
Cameron, Caleb, Kanan. Hey, the goats,
Yeah, no,
goats.
clearly. We've talked a lot about the boys. So I'm referring to them affectionately as the boys for that reason. But it would be really cool within all of this, just as like we could be screaming to Caleb, you know, through the mentorship and the conversation, like it kind of had a little bit today. We got cut off towards the end, but it's just a lot of fun. I think a lot of people, including myself, like this is like, it feels like a bucket list, just being able to talk the talk and actually have a community. How many man hours have you spent learning a language and you're actually communicating that language with other folks?
It's wild.
Right? You're
Yeah.
actually able to communicate and articulate an entire language with other folks that understand you completely. And I mean, Michael's brought up and he said, like, I quote unquote speak the language unofficially, like with the understanding of concepts, right? Speaking the language, we speak the language, you speak the language. I mean, making money with the language is a thing. And it's also a journey to really understand that, which is Michael's YouTube channel and why you need to patiently
Hello.
go and study. Yes, sir, Mr. Doyle. We'll get to you in 1 second,
Okay,
buddy.
okay.
Oh yeah. So just to wrap up real quick,
Yeah.
I
Go
can
ahead,
really,
Alex.
yeah. A quick question. I heard Michael. I think when he was talking to Austin, he was mentioning how the Nasdaq futures may not necessarily be the best chart to look at because, as we know, the futures are meant as a hedge and they mainly trade up. So, what would be if let's say we're talking about the Nasdaq and that can be represented as the NDX, US 100, QQQ, or NQ. Michael, what would you say is the best representation of that index?
Cash versus futures.
Cash. Okay, what would that be? Cash versus futures. What chart would that be? I'm sorry.
If you're using, like, for instance, if you're trading the SPX, you can use ES against that. The cash index for, I don't recall off the top of my head what it is on TradingView, but you can plot that against the futures contract. You can, the Dow, I don't really care about that. I don't look at that index. Give me one more second, babe. Okay, I'm almost done. It's a couple more minutes. I'm sorry, guys. The wife's looking at me saying how much longer you're going to be.
Yes, I can
Yeah.
tell. I can tell.
But you don't need, well, the futures alone, you can make all these decisions based on that. You don't need to look at anything beyond that. Even though what I was saying earlier, it's not representative, I think what I was referring to right now, because it's in a big block or consolidation. And it's not as favorable as if a market was allowed to trade and have price legs above or below. It's just being held. I mean, for months, it's been like this now, for months. When have you seen any time in your trading career where it's been held in such a range like it is? It's just, it's unprecedented in my opinion. In 34 years, I hadn't seen anything like it. So I'm, in that regard, I'm learning, just like you are, to navigate in these market conditions because they're new terrain for me. And anybody that comes out here and says it's easy, you know, it's, oh, it's so, notice I haven't been saying those terms. I've used them a lot in the past, but I dialed it back because I'm actually being challenged right now. Like I'm being challenged. So the only way I can compensate for that is to dial back frequency of trade, leverage, look for one good setup a week, and focus on just simply that and being content with it. And if I can be a busybody with, you know, tape reading it or working with my kids and trying to help them find, you know, a refinement to their models or find a model like this for Caleb, then it's fine. I'm using my time wisely. But I don't think that you should stress so much about, you know, finding the better this or better that, because you're going to trade the NASDAQ futures if you're going to trade the market. So just look at that price action because that's going to be useful to you, and compare it to the continuous contract. I said cash earlier. I meant to say the continuous contract. So there's a slight discrepancy between the futures contract versus the continuous contract chart. And the continuous contract is useful because it'll show you inefficiencies that the spotted portions of front month, like we're looking at March right now, and the next contract will be June for NASDAQ. If you look at the price action versus March and June right now, it's spotty a couple weeks ago, but it'll start filling in as we get closer to the end of this month and go into March, where March will close and settle. We roll over into June contract. Well, that spottiness is corrected and compensated by using the continuous contract because it's always factoring the front month. Looking at, and I just recently did it when we were trading at the highs at NASDAQ. I said, listen, the continuous contract shows that we've completed something, but the March contract hasn't yet done that. So I expected to trade up a little bit higher, take out that buy side, and that's what it made its recent short-term high, and we sold off, you know, 1,000 or so handles from that. So between the continuous contract and the front month that you're going to be trading on the futures contract, if you're using NASDAQ or ES, that's enough. You don't need anything more. You don't need any more insight. You don't need nothing else, unless you're going to use SMT. Then that's, you know, ES versus NASDAQ.
Or PB and J. But that'll be another day, boys and girls. That'll be for next time. Next episode of Inner Circle Trader, boys and girls.
Really quick, Michael, I just wanted to ask one more question. So regarding fundamental analysis, like we all know, like we want to look out for the red day news folders and high impact news and how that's going to go. And sometimes we can use that to be our rocket fuel and the liquidity and volume that we want to see injected in the markets. And like, let's say, like, for example, something like gold and silver, which have gone up nonstop. And fundamentally, you can see the reason was for that was the Chinese government. They're stocking up on their gold pile. There's uncertainty, the war with Russia, and all of that. So fundamentally, you can just kind of look at it and go long, like based off of that. Versus like you might not have to worry too much about the technicals or maybe necessarily the PD arrays. But like, so how would you say like fundamentally how important is it compared to our technical analysis? Like, is it equally as important? Is the technical more important, and then you have the fundamental in the back of your head, or like what would you say about that?
Well, if you recall, if you've been hanging out with us for a while, back in 2020, 2021, 2022, I mean, I was big gold because of all the geopolitical things. I told you that they were trying to get that BRICS coalition having a gold-backed currency. That's a huge fundamental driver. And fundamentals, so that way you understand, I'm not a day trader that looks at fundamentals as a decision-making tool. In other words, it doesn't give me a buy or sell because I can trade against the fundamentals on an intraday chart. and be in and out inside of 10 minutes and make a couple $1,000s here and be content with that. So don't think that you have to have fundamentals to be a day trader, because you don't. But if you are going to be a dynamic intraday trader, that means you'll take a buy and a short in the same day, and you're not concerned about daily bias. You're not concerned about long-term fundamentals. The fundamentals may be bullish, but are you going to negate something that's so obvious as an intraday short on gold because the fundamentals were primarily bullish? No. What we would do is you would take a smaller position and leverage, because you could be offside at the inopportune time and get crushed. But when you're trading with the fundamentals, it's a green light go for you to use your larger, more ample measure of leverage. And you're trading likely on side. You're trading in the direction of the fundamentals. You're trading in the direction with it technically when the fundamentals are in line. So fundamentals to me is just a long-term, broad, think daily and weekly chart. From a fundamental perspective, that's the timeframes I'm utilizing fundamentals on. But I don't have a problem with fading those fundamentals because I'm intraday trading. Does that satisfy you, or is it not?
Oh no, that was amazing. So basically, like, fundamentals, they're the most useful for
They're a
like
macro tool. They're a macro
swing trades,
tool.
macro big trades.
Yes.
Intraday trading, it doesn't matter. You want to find the inefficiencies, is what you're
Yes.
saying, correct?
Yes. The fundamentals are not going to. When I was first learning about fundamentals, and this is what made me anxious about it, because first of all, it's a lot of data. Every day there's new data coming in. Who can keep up with that? Like, I don't have a trained accredited staff to keep up with that shit. I don't know how to measure the supply and demand factors on that stuff. When these reports come out, I don't know what they say. I don't know what they mean. I never try to decipher that shit. I just learned that shit's about to hit the fan. It's going to move. And I'm going to look for where I think it's going to go based on that new injection of volatility, which is why I call it that. So fundamentals are not a factor for me, because in the beginning, I thought that I had to have every understanding nailed down about the fundamentals being bullish or bearish. And I tried to stick with a market when I thought were primarily bullish, because I was only trying to be a buyer. And I was getting wrecked when they would sell off. I'm like, why the hell is this shit going down? It's supposed to be bullish. All the fundamentals are bullish. Everybody's talking it up. CNBC is talking about going up. Everything's going up here. The crop reports are saying this is just not enough soybeans out there. And I'm buying this shit, and it's dropping. And I suffered a couple limit down days against me. How the fuck's that fundamentally bullish? But that's what happens sometimes. You have these short-term corrections that get corrected quickly, and they run in and they buy it up again if the fundamentals are in fact bullish. So it's a longer-term macro perspective. Don't listen to the word if you're not English speaking. Don't think I'm talking about 10 minutes before the close of the hour and 10 minutes after the top of the hour. I'm not talking about macro in time. I'm talking about macro, broad brush approach, a larger degree or higher time frame perspective, a macro perspective on the market. So in other words, think of like a monthly and a weekly chart, and maybe going into the daily chart. Those time frames, fundamentals are important. But intraday charts, like we're trading, fundamentals have little to no influences at all on my trading.
So like basically, like, so what you're saying, like when you started out trading, you were just trading, like you said, the main macros and the fundamentals. But then you saw, like, in the intradays, they'll go down to certain PD arrays and inefficiencies. And then that's basically what led you to look for what you see in the markets to see, okay, why intraday are we going down into these inefficiencies and PD arrays and then going to where our overall objective is. Would that be correct?
Well, when I first started, I was using a 50-day moving average on a daily chart, and then an hourly stochastics. And then when it would be oversold, I would wait for a divergence in price where price would make a lower low, but the stochastic failed to do so. In a market that I was already wanting to be long in, and I was trying to buy it, and the times that it worked, it was nice. When I didn't see it work, it would frustrate me because I was insisting on the indicator working, that I thought that that's what it was that was making price go up and down. And I was afraid to go short because I didn't understand it. So I was a perma bull, and I spent about 1.5 years just trying to do only buying. And eventually I got handed my ass so many times, I was like, what am I supposed to be seeing here? What am I missing? And then I felt inspired to look at certain parts of certain moves, and I went back into where I was losing money, and I compared it to the things that I saw in my winning trades. And the disparity between what I saw when I was buying, I ended up buying below old lows. So what am I buying? I'm buying sell side liquidity, and it ran. So that was a contributing factor for me finding out when my winning trades were working, and they were trading. I was trading at a divergence on an hourly chart based on when it would drop down, give a bullish divergence, and I'm using end of day data. So I'm working. I'm looking at that divergence formed on end of day data. So I'm telling myself, okay, well, I'm going to be bullish tomorrow. So I want to see it open, and then I want to buy below the open. So I'm going to buy on a limit. So sometimes I was buying it, and it would just keep dropping even more, and I would get hurt. And I would either have to make the decision to take another trade intraday, pull over to a payphone, call in the Lynn Waldock and ask them, to put another order in, or simply say, I got to figure out what I did wrong today. But by comparing my wins and my losses, I discovered over time that there was times where it would go into these areas where it was just one single candle. And my entry seemed to work a lot when it was doing that. And by comparing and contrasting when I was trying to buy it and I wasn't buying below an old low, and I wasn't buying it when there was no imbalance, and I wasn't buying it at order block that now, I was losing. And I had no support structure behind price action to support that buy. It was just me looking at something that there's a 50-day moving average that's sloping up. Okay, in technical analysis, they call it stacking, where it's angling up. Then by having that, that's my bias. I don't do anything but simply go long. But I can't just go long until the 60-minute or hourly chart gave me an oversold condition. And if it made a lower low at the end of day, so in other words, I would download from Metastock, that was my platform, and I would get the data. It would download, it would take a couple minutes to do it, and then it would give all the open, high, low, and close for the markets. And then I'd plot it, and then I would change the time frame to an hourly. And then if I saw the bullish diversions occur in the stock, and now mind you, I don't trade like this now, but I'm just saying, you mentioned, was it like this in the beginning? This was actually the transformation of a neophyte to learning what I'm doing and teaching today. But my winning trades were always associated with I'm entering in this imbalance that I wasn't aware of, or I'm buying below an old low when it's bullish. Either of those cases, what am I doing? I'm buying at a discount, and I'm absorbing sell side liquidity like smart money would. It wasn't the stochastic that made it go up, but in my mind, that back then, that's what was happening. The markets were sloping up on a daily chart with a moving average, exponential 50-day moving average, plotted on the close, and then a 10 by 3 by 3 slow stochastic on an hourly chart. And I just simply looked for a bullish divergence, which is a lower low in price, but a higher low in the stochastics. Or if I was looking at price, and price had in the past, the most recent price action, it created a low, but it made a lower move, but that low didn't pierce that old low, but the stochastics made a lower low. That's a trend following, or quote unquote hidden divergence. And Nick Van Nice was the guy that put that out there. George Lane did not fucking create that. He did not author that. And it pisses me off still to this day when I see people doing that shit. The only person that ever talked about that first was Nick Van Nice. Okay, Nick Van Nice, he used to publish commodity price charts, and he was out of, if I'm not mistaken, Des Moines, Iowa, or something like that. He did a charting service, and he did a little bit of stint of education and whatnot. The CFTC shut him down because he claimed gains in doing something that were not attributed to the market move that he was referring to in his marketing, and they shut him down. So they just stopped all business with it. But he was the one that taught that trend following, hidden divergence, or type 2 trend following stochastics divergence, or indicator divergence. So those are the two things that I was implementing, just trying to be a buyer. But I discovered by comparison, going into deep study, back testing, looking at old moves, and where I actually lost money, and in the times that I did make money, which in the beginning, I wasn't making money a lot. I was losing more times than I was winning. But when you're trying to start doing this and you get one win, well, shit, who cares if you had 20 losing trades? You made one time win. So that means you're a good trader. Just got to keep sticking with it and finding new money to put into the account. And that was what I was doing. But by figuring out where the moves originated from and what made my wins become winners, those were the common denominators. I was ending up buying into areas that were imbalances that I didn't look at. I didn't notice them. I didn't see them there. But because I was being prompted by, I felt it was the Lord. Look at these places. Look at this. Look at that. Over time, it helped me find what I was missing. And I just said, well, I'm going to start looking at this with real price action and see if it holds up. And sure, here it is. And now everybody around the world knows about it. They're all using it if they know how to do it properly. So that was kind of like the origin story of me finding this stuff, and then new PD arrays came by me studying and being prompted. Look at this, and I'd lose more money doing some other things, trying to tinker with it, tinker that, and it'd be like, look at this or here, and I'd look at it and say, okay, let me go back and see what this is doing. And 81 of those things eventually happened, and the collection is not really gained anymore since then. I don't think I need any more, actually.
No, I love what you're saying there. I love how you said. It's funny how you're saying that you're buying an old low and it'll kind of line up with the oversold. So
You broke up, buddy. I can't hear you. Can you guys hear me? Am I the one that fell off?
Yeah, I can hear. No, I can hear you. I can hear you. Alex, are you there, buddy? Alex, he literally just dropped off. Something happened. Yeah. No, it was something happened. Maybe he comes back in a second. I mean, we are wrapping up per
give it till 8 o'clock. I definitely got to go.
Okay. Cool. All right, that's good. We'll see if Alex can come back. We got some folks here, and we'll keep it going. Let me see. Where is Alex? There's Alex. Come on back up here, Alex. Is that Daredevil? What? Daredevil trades? I want to give you a hug. I haven't seen you for a long time.
oh, real quick, can y'all hear me?
Yes, sir, Alex. Welcome back.
I just wanted to add into that. It's just so funny how Michael was saying, like, how when he would buy an older low and it'll line up with the oversold stochastics, and he didn't necessarily understand, like, why it went up after that. But it's just so funny because, like, if you look at, like, the DOM and if you look at order flow, where there's big contracts, they will line up right where a fair value gap is or an order block is. Or if you look at bookmap and you look at the liquidity main points of those, they'll line up where major, minor sell side liquidity is, or an order block or fair value gap. So it's just so funny, like how people are like, oh, you need to use VWAP or this or that, but it's like, no, bro, the concepts line up and they work, and like he really figured out the inner fucking tinkerings to this, and it's just amazing. And one last real quick thing I want to ask is for first presentation for value gaps and order blocks. Like I was noticing this week, we're trading into ES's first presentation fair value gap on Wednesday a lot. We're referring to it a lot. And for Michael, I just wanted to wonder, like, what would you say? So would you say like a daily fair value gap or a daily order block or 4 hour would be more powerful than those first presentation ones, and those would be just used as quick stops for those bigger PD arrays?
What were you saying? You broke up. You said what would be better, and then I didn't hear anything you said after that.
Oh no, so I was saying for the first presentation for value gaps and order blocks, would those be less than like a daily fair value gap or a daily order block? Like, would those be like minor liquidity to go into those bigger PD arrays?
I'm not fully understanding how you're asking that, and I apologize. I'm trying to understand what you're asking, and I don't. Kitt, are you picking up on anything what he's asking about? Because
No. Well, he's asking if you can utilize, for example, maybe there's a draw on liquidity of a 4-hour SIBI, and there's first Prezi that's a BISI, and you're going to utilize that as a stop in trajectory towards the 4-hour doll. Is that correct, Alex?
Yeah. So basically, what would you consider the stronger draw on liquidity? It would probably be what, the higher time frame, right? Like a 4-hour fair value gap or order block, or a first presentation fair value gap that appears.
well, I start, even though you don't see me doing a lot. I start from a monthly chart. I work down from the monthly down to the weekly. I work down to the daily chart, and those PD arrays that I'm looking for on those timeframes, which aren't many, or the draw on liquidity, old high, old low, they are the biggest drivers. They're going to go to those levels, but it's going to take time to get to them. So their parent, that's the real moves that's taking place, the monthly and the weekly chart and the daily. Intraday, anything that forms on an intraday chart is going to be subordinate to what's going to happen on the daily, what's going to happen on the weekly, and what's going to happen on the monthly when it's directionally driven. Meaning if you're bearish, every premium array on the intraday charts are going to be subordinate to that higher time frame draw on liquidity or narrative and price action. But intraday can create inside of the same hour, in small little tiny little ranges, it can create these little micro structures where it can dilly-dally around inside of, and sometimes contrary to that larger time frame. So the fine-tooth comb approach to getting in there and get to the smallest detail, you can use the intraday charts to get in sync with these larger time price moves. So in that regard, they are the most powerful when they act in that characteristic. But simply because the first presented fair value gap exists in the chart in and of itself means little to nothing. It just means that now you have something to observe. And if it fits the criteria, where if you're bullish, I don't need to have it trade in the direction of the monthly or the weekly, but I prefer to have my maximum leverage when it's working in those directions. So if we see a first presented fair value gap on an intraday chart, anything less than a daily chart, I'm not looking at it as it needs to conform to the 4 hours fair value gap because it exists in the 4 hour, because that 4 hour fair value gap may be outside of a market structure that I don't want to see it trade there if I'm bearish. So it doesn't, just simply because it exists on a higher time frame 4 hour, is in no way, shape, or form a control mechanism, or it must come to that one because it's greater because of time frame. That doesn't fit. That doesn't fit the delivery model. It means that can stay open because we were part of a larger term price run that may be transpiring for weeks still to come, moving lower. And that 4 hour SIBI or BISI, if you looked at it as a potential inversion fair value gap, simply because it exists on the 4 hour chart, has no real control over the lower timeframes. The lower timeframes are going to be the right now perspective, and these are going to be the right now salient points that you have to be referring to. But the direction or overall delivery of price on a larger macro perspective is going to be directly linked to the higher time frame, monthly, weekly, and daily. Gaps, inefficiencies, order blocks, all that stuff, just simply because they're in intraday larger time frames than say that of a 1 minute chart, doesn't in any way, shape, or form call more emphasis to it. So there's narrative, there's market structure, there's a lot of things that have to go together in concert to get to the real nitty gritty. Because it exists in price, therefore it must bend to its will because it's there. That it doesn't hold water like that.
That that answers everything perfectly, Michael. I can't thank you enough for all
Good
this help,
question,
my
man.
man. I'm blown. My mind's blown. Everything. Kit, Michael, bro. I love the spaces, bro. No
High
homo.
five,
I
bro.
love
High
you guys.
five. High
Love you both, bro.
five, bro.
My God. Thank y'all so much,
Enjoy your
bro.
weekend.
Please, I have just
Love.
two questions real quick.
Yes, sir. Thank you, Michael.
Yeah. Yeah, yeah,
Uh,
yeah.
uh,
We're doing great. Mr. Doyle's here. I got to get my boy Neil in here. Mr. Doyle has been patiently waiting. Neil has just gotten absolutely from the top rope denied. I see you, holy fuck. I'll try and bring you in too. I love your name. You know that. But Mr. Doyle, you're next, Neil, and we'll see where we're at.
okay. Oh, I'm the one speaking right now. So, okay. Oh, hello everyone. So here is Mr. Doyle. I have two real questions, like real quick, which will be oriented on the psychology and the risk management. I know we talked a lot about the technical part, but right now, I want to dive in the psychology and the trade management. So, first question, real quick, is are consistent profitable traders still losing account? If no, how are they actually making six figures each month? Because there's this paradox. When you're trying to make like big amounts, either you actually know exactly what you're doing, or maybe you're just over leveraging. So I would like to have some tips, because like sometimes the technical part isn't really the issue, but really being able to manage your account properly. I don't know if you guys understand what I'm trying to say.
No, Mr. Doyle, you're asking great questions. We're at the twilight of a long, very good conversation. And did you get a chance to listen to the space today?
Yeah, exactly. I understood everything.
All right. And if you were to guess within risk management and with what you're learning in the mentorship and what you've learned from Michael today, if you were to guess, he's here. If you were to guess, how would you answer your own question? Psychology and risk management, and you're applying what you've learned in the 2026 ICT mentorship to your specific question. It's a good question. How do you answer it?
The thing is, because I see from my own point of view, is like if you're trying to invest like 1 to 2% theoretically each day, and take for example each month you're actually over 20% of the account, and if you got a 100K account, that's 20K in a month, but that's not actually a six figure. So I was actually trying to understand like if there's a way to actually go over six figures, because like what I'm trying to do is I'm trying to really make this my profession. I want to be a full-time trader.
Yeah, but bro, everything you're saying, I love you and I appreciate you, and I really, really do value your question, but applying what is being taught right now
1
would
micros, 2
mean
micros.
it would mean that we'd be starting smaller in how we're addressing your exact question. How do we address risk management and psychology? We don't go walking in slinging contracts thinking we're going to make six figures in a month of trading, do we?
Consider this, if I may.
So the fact that you're presenting it
Yeah,
that way,
we only have a
go
couple
ahead,
minutes. I
please.
want to be able to get another guy. I want to help him as best I can. if you've been paying attention, what I've been teaching this year in the last couple of weeks specifically, I'm trying to kind of like recalibrate everybody's expectations in a very difficult market condition and remove this necessity or this unrealistic expectation to try to make six figures a month. Do traders make six figures a month? Absolutely. Can you make six figures a month? If you know what you're doing eventually, but you won't do it quickly. And hearing you talk about risking 20% of your account, that's just fucking stupid. Like nobody should be risking 20% of their account. Nobody should do that. So if you want to make six figures, this is how you do it. You start with one micro contract and you trade with that until you make 5% for the week. If you can do that, you stop. The next week, aim for 5% again. And you keep doing that, keep doing that, keep doing it. You can make 5% a week with one micro contract. One micro contract can do that. If you put 20% on, which is simply 5% 4 times each week, but you're assuming that you're going to have perfect trading. I'm assuming that you're managing your trades appropriately. You're aiming for more than what's necessary. My son's literally doing it. He's doing it right now. He's following the logic, he's putting it to task, and he's doing it. So inside of 2 weeks, he's made 26%. For the month of February, he's done. He's done the math. Now, does that mean he's not going to trade next week? Absolutely not. He's going to take trades next week. But put a calculator in your hand and start with a hypothetical, say $5,000. And you go in and you do 5,000 times 1.20 and hit equals, and do that 12 times, hit it 12 times. That'll give you the hypothetical return if you can average 20%. Now, I'm not saying as a brand new trader you're going to make 20%. But instead of trying to double the account or make six figures or hold on to these very lofty goals, that $5,000 transforms into a little bit more money by the end of the year. Take some taxation out of that, start again, do it 12 more times. Whatever that ending balance is, It'll tell you what your year 2 should be as a target. It doesn't mean it's all you're going to make. It doesn't mean you're going to hit it, but it's a roadmap. Inside of 3 years, you're in 7 figures with your account balance. Can you wait 3 years, become a real 7-figure trader, and then all you got to do is make 10% a month and you're making $100,000 a month? That's only 2.5% a week when you have a $1 million account. That's easy to do with that kind of leverage, but it's not easy to do if you've not graduated in using that kind of leverage and moving up to that size. These people that go in there and they try to trade with these prop firms and they buy all these quote unquote $1 million. I got $1 million of trading leverage. No, you don't. You don't have that. And even while they don't have it, they're mentally strained because of the numbers that's moving around. And it's not even real money because they are not acclimated to that type of size. They have not conditioned themselves. So first of all, let's get one thing straight. Most of the people that say they're making $100,000 a month, they're fucking lying. They're bullshit, okay? There are people out there that are showing live trading. They're showing broker statements. And those individuals have a little bit more credibility, but I still would be very diligent about trusting them. If they're so inclined to show just this much, then they should show everything. And they're not obligated to. None of you are obligated. I'm not obligated. None of us are obligated to show other people what they're doing. But instead of trying to get to making 6 figures when you don't even have the premise understood, where you start small, start with 1 micro and hit a target of 5% over the course of 1 week. Do you have the ability to do that? You only need 2 trades at 2.5% return. Think about it.
The bare minimum.
4 trades at 1.25%. That's not a lot when you're using a small amount of money. But being consistent, being routine about it, that's how you compound. That's the secret to making lots of money. The compound aspect of building the equity as your money goes up. You're not increasing the measure of risk percentage-wise. You're not increasing the percentage target. It's always staying the static amount. But your new equity affords you, when you get $2,500 more, you trade another micro. You cannot add another micro contract to your trades until you include a new additional $2,500. And you stay in that pattern. And eventually 2 contracts works quicker to get to another 2,500. And then you can trade now 3. Or if it just so happens it pushes you to a win where you got 5,000, 5,000 more, you can trade down 4 contracts. And it goes up gradually, but eventually what happens is this effect of compounding will start moving you so quickly into a number of contracts. It doesn't go up incrementally like 1 more, 1 more, 1 more. It goes up 1, 2, 2 becomes 4, 4 becomes 8 or even 10 sometimes based on your returns, because you're eventually going to hold for more than what's required. And that's normal. That's what your goal should be. But you should have a cookie cutter. What is your bread and butter amount of handles that you're aiming for? This is what you have to get out of the trade, or you're not touching it. Mine's 37.5 of handles. If I can't get 37.5 handles, I'm not taking the trade because of the volatility right now. Before, if it was 20 handles, that's enough for me. But we're a little bit more wild right now. So don't pressure yourself with trying to figure out the mysteries of online bullshit, because people that say they're making lots of money many times aren't doing that at all. And gradually use what I'm talking about this year to build. If you can't build a demo account balance up with 1 micro starting point, build it up, work towards that. And if you don't have a positive return at the end of 6 months, you have bigger problems to worry about than trying to hit 6 figures or trying to figure out how to get there, because it starts by doing something simple like this.
Yeah, I understand. Okay, thank you very much. I just wanted some clarity because I sent 20%. Maybe it was wide, but actually what I actually do is I just follow 10% each month, because before you talked about prop firms, I wasn't there unfortunately this morning. I was aiming for prop firms 100K and aiming 10% each month. Last year I passed the FTMO challenge 10K just using the 2022 model, and I just in 1 week and in 1 month I've just been just compounding wins, understand? So I was just trying to see how I could actually just scale up and like just go bigger. Okay, but from what you say, I clearly understand what you said. So thanks for
Try
having me.
this exercise, okay? This goes for everybody. Try this
Yeah.
exercise. Try to trade 4 weeks in a row with just one micro and be consistently profitable. Aim for your minimum objective. How many times for that course of that 1 month? 4 weeks, 20 trading days, even on non-farm payroll days. Try to find consistency. If you can't be consistent with one micro contract, aiming for whatever your low-hanging objective is in terms of targets for handles. This is how you build wealth. This is how you make fucking tons of fucking money. It ain't going out there shooting the dice, trying to see if you can win big on something that just happens to fall in your lap. You're looking for something that's repeating. Your cookie cutter. What is the thing that's going to be the catalyst for you getting into the trade? That has to be always the same thing. This is what I'm looking for. This is what the model looks like. This is my entry mechanism. This is what it looks like for my targeting. It looks like a relative equal high or it looks like a relative equal low. Simple. I'm looking for the first 30 minutes of trading. I'm looking for the gap to give me some kind of insight. Where's the middle of the gap? Right away, I got a 70% likelihood it's going to go in that direction. So can I find my model, my low-hanging fruit objective of my handles in that range, which is just half gap closure? If you have that, you got a loaded deal. It's easy for you to be able to implement your model. And you can be done in the first 20 minutes of trading many times. But don't go back in once you do it. Stop. Turn the charts off. Go do something else. At the end of the day, when you can't take a trade, go back and then study. You have to be disciplined. You have to apply these protocols. Otherwise, you're going to be led astray by your impulsiveness. You're going to see people talk about what they did. You'll see me, you'll see my students, you'll see other people doing other things. And you'll be like, wow, I need to do something else because I don't feel like I'm keeping up with the rest of the people. And that's bullshit. You worry about, can you follow 20 trading days, trading one micro contract, one measly little ass micro contract. Follow that model for 4 weeks. I guarantee you're going to discover that you don't have the discipline to worry about 6 figures. You can't even do this. And it's something that you have to graduate into. If you can't do it with one micro for 4 weeks in a row, following the model, you cannot succeed. You will always do something stupid. You'll wreck yourself. You won't follow your model. You'll be impulsive. You'll start using minis when you think you're on the right side of the marketplace. You think you're hot. You think you're good. Well, shit, I got this funded account. I can trade 10 more contracts. I've been nailing it. Like I'm dialed in. Why do I got to worry about doing all this dumb shit? Let me go right to the problem and get me my money. And you're going to wreck yourself. And then you're going to appreciate the power of what I'm talking about. Because when you fail, what are you left with? What did I do wrong? And you're going to be doing the opposite of what I just said here.
Facts. Okay. Thanks very much for having me. Appreciate
You're
that.
welcome, brother. Kitt, what's the other guy that we were waiting for?
Neil. Neil is if we can close with Neil, I would be very happy for Neil because it's been difficult for him. Neil, you're up, brother. Thank you, Michael, for taking this last call. We're wrapping up at 8 o'clock. You're in, Neil.
Hey, what's up, guys? What's up, Michael?
Hey, bro.
Good to talk to you again. So, look, I know we're stretched for time, and this is something that I've wanted to ask you for. I don't know if ask you is more or less just tell you an observation that I've had. So, I'm gonna try and be as succinct as I can with this. So, bear with me. All right. So when I initially discovered your page and started studying your content, and you started talking about the 3 previous days, PD arrays, these are the things you need to look for. In order for me to better wrap my head around it, I created an indicator that essentially overlaid the 3 previous days price action over current price. So when I'm looking at my chart, I have the 3 previous days. It's all it is just a one SMA cast forward, so that each individual candlestick lines up with its previous day predecessor. And I started noticing these patterns where specific, areas of the chart would get targeted at specific times. Something like the 8:30 news candle, say the previous day or 2 days or 3 days before, if that was like a low and price eventually moved below it, and then at 8:30 price would come up and kiss the bottom of that candle and then reverse and keep going back where it started from. Another thing I noticed is that the midpoint between previous days price action will act like some sort of a barrier for price, and you can kind of look at it as which side is price playing real hard. You know, is it going to use this as support, or is it going to accumulate above it? And then, so I've been looking at it as like a premium and discount. But mind you, I've been doing this for years, ever since I first wanted to try and understand the three previous day aspect of what you talk about. And not only that, and I'm just going to leave it at this, and you can comment what you want. um there are times when the market looks as though it's either shadowing or mirroring previous price action. So I just wanted to bring that to you, because when I first entered this space, there was a lot of profiles, gatekeeping information, talking about they had some secret sauce and their secret time things and da 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 da. You know, they got a lot of, you know, traction, because of course nobody can prove them wrong, but they were just gatekeeping all this secret, super secret squirrel information they supposedly, you know, got from your logo, or some other clandestine, you know, charter membership paper that made it out of the group, you know. So
Just let me interject real quick. Nobody's done anything with my logo correctly. So let me tell you that right now. And there's a number of people out there that supposedly, I get emails all the time. I cracked your algo. I cracked your logo. You're no, you didn't. But continue. I'm sorry.
yeah, so to me, your logo looks more like the correlations of the Bible. If you look at how all the
Bingo.
interconnected stories of the Bible,
Bingo. Bingo.
that's what it is.
Oh,
Bingo.
Yeah, let's put that to bed. But anyway, getting back to it, the
ooh,
three previous days.
that's so lovely. Wow.
But yeah, the three previous day things, like, is there something to price targeting a very specific price level at the exact same time on a different day?
Real quick, Neil, can I just want to broaden his question, Michael, to add understanding for you, in that I know very well what Neil is trying to say, and he puts the one SMA and he projects it forward, and you can see how his name is reflection of the ghost in the machine, because this is something he's been doing. I mean, since I've known him on social media for years, this reflection, this shadow of projecting price forward is his question. I just wanted you to visualize that if you hadn't already. So I hope that helped as Neil asked it.
I honestly have no idea what the question is. And I apologize. I'll
Okay,
stay here
so
long enough until the
Okay,
no,
so
question's
no.
asked.
That's fair. That's
let me
fair.
just ask this one thing. Is there something to a PD array printing exactly at the same price at exactly the same time as a previous PD array of like the same flavor? So let's say we have a buy side imbalance print at 949, and the next day at 949 another buy side imbalance prints at that exact same price at the exact same time. Well, on the 1
That's
minute chart,
very,
of
very
course.
strong. If you see that, it's very, very strong.
Tenfold. I appreciate your time, sir. Thank you very much for fielding my question.
You're very welcome. That's a good question, too.
He's like, we'll just unravel the logo thing here.
Bo wants to go down a rabbit
Wow.
hole.
Yeah.
I love how he just
Wow.
casually unraveled the logo right there. That was insane.
Wow. And here I am all this time thinking I was slick, turning it on its side and thinking it was time.
I
Oh,
have it
Wow.
on
you
my
got it right by
wall
turning on your
at the
side.
Bible today.
Turning on your side, you'll see it.
Yeah. Yeah.
Well, listen, guys, I had a lot of fun. I could go longer, but my wife is telling me that she wants some time with me. So, you know what day it is, know what time it is. So I got husbandly duties to take care of. And I wish you all a very pleasant weekend. Be safe, and I'll catch up with you next time.
Have a great one. 808, y'all. Peace.